Good morning, everybody. Welcome back to another episode of the Market Open. We are live. It is Monday, March 9th. Thank you, everybody, for being here. We have a ton of things that have happened over the weekend. Realistically, a ton of things that have happened over the past 24 hours that we're going to discuss. It is unfortunately resulting in a red pre-market, but if you were watching the overnight markets last night, I could not do the future show last night because I was with family, but the futures were pretty ugly. S&P 500 right there, losing 670 for the first time all year. For the first time all year, 665 in the pre-markets. It was a lot worse last night. It was at 659. We were down about 2%. And the entire market, one could argue, was much worse than it was in the pre-market. We had some things happen over the past 12 hours that have kind of changed a bit of the dynamic of what happened since last night, but it's still pretty ugly. Rocket Lab's down 1%, SoFi's down 3%, Meta's down 2%, Palantir down 1%, NVIDIA was pushing almost below 170 last night. Now it's back at 176. Again, once it gets to that 170, 172 level, it tends to bounce. And it gave a little bit of a bounce last night. We'll kind of talk about why. Blackstone, BlackRock, KKR, Apollo, all of those down 2%. Microsoft down 1%. AppLovin down 3%. Apple down 1%. South Korea was down 6%. Japan was down 5%. What happened last night? What actually happened last night? And for those that didn't see, I'm sure a lot of people did, but we had crude oil get above $100 for the first time, highest levels, since July of 2022. Since July of 2022. So that was the ugly news that happened last night. And there's a lot of nuance to discussing what exactly is going on with oil. We've been analyzing oil for the past couple of weeks now. The market has kind of been pricing in exactly what's been happening with oil, at least to an extent. I don't think it really expected a full-on war to break out, and that kind of created conditions for oil to really get to some high levels. But obviously, oil has an impact on pretty much everything, including inflation, the prices of airlines and cruise lines, supply chains, etc. So we're going to get deep into what's going on with oil, what happened over the past 12 hours that kind of got oil to calm down a little bit. We were actually pushing $120 a barrel. Now it's at 103, or it's actually at, I think it's almost just below 100 or at 100. It's at 101 right now. So it's not as bad as it was last night. And that's kind of calmed down the pre-markets. Otherwise, this was getting ready to be one of the worst futures open that we've seen basically all year. And not even all year. I mean, literally since October. And given some things happened last night, we are starting to see a little bit of a retrace. So we'll talk about that. We'll keep going into it. And then we'll get into the broader markets. I mean, second trading week of March, we've got a bunch of different headlines to discuss, a bunch of different things happening. We have a bunch of different earnings happening as well. And yeah, we are going to get through this week. Now, this week is going to be definitely a busy week because we've got a lot of different events and things happening across the entire market. Most of the earnings are done. Tomorrow we do have Oracle, though, and we had a bunch of headlines on Friday, which caused the market to go down literally 5 minutes before the market closed about Oracle. Oracle came out this morning and said all those accusations or headlines that they're not building data centers with OpenAI fast enough are false, and Oracle kind of got a bit of recovery. But tomorrow's earnings on Oracle are going to be very, very important, and we'll, kind of set the stage for how we think of this data center space going into the end of March. All right, let's get into it. Good morning, good morning, good morning. Thank you, everybody, for being here. Let's get started. I think we get started with the first kind of big headline that I know everyone is talking about, which is none other than HIMSS. We will talk about what's going on with oil and the S&P 500. Lumentum did get into the S&P. Unfortunately, SoFi did not get into the S&P 500. You had four other companies get in, including EchoStar, which I don't even know if EchoStar is profitable, so I'm kind of confused how they got into the S&P, but we'll talk about those companies. HIMSS right there, up 51%. What is going on? Well, it looks like, and this news came out on Friday. I mean, it's quite incredible the way the news came out, and I think even if you're an OG HIMSS shareholder, this was kind of one of your like utopian scenarios that you didn't really think would happen, but you acknowledged like it has a possibility of happening. Novo has officially dropped the lawsuit against HIMSS. And the legal battle between HIMSS and Novo, which has created all the pain in the HIMSS investor base in terms of being able to legally or not legally sell these compounded version of GLP-1s, they are officially dropping the lawsuit. And now these companies are essentially going to work together. to be able to sell these drugs. I mean, as a him shareholder, if you've held on to your shares, which it probably had to be very hard. I mean, they bottomed at around 14 to actually hold on to those shares, because obviously it's tough, like when everything is running and this stock not only is staying, forget a stock staying flat when everything is running, this stock was just going down, and it was going down aggressively. We're talking about like 5-6% every week. It was not fun. The interesting thing, and the thing that could be fun today about it, is that HIMS is 40% short. So 21.9 million shares are required to hedge delta at pre-market prices of $24.08, given you have a lot of market makers that have sold short, and just a lot of people that have thought HIMS has been the best short, and they've been right on their short. If you have not covered that short since you went short, and one could argue a lot of people went short around this range, 24, 25, thinking that the earnings would take them down to the teens, which they were right about. If they didn't cover, they might have to cover today. Now, maybe the market wakes up and says, even though HIMS is partnering with Novo, it's not something that should give them this much of a boost in their stock price. But then you look at the valuation on this company. It's trading at less than 2 times sales at a $3 billion market cap, guiding for basically the same in revenue in 2026. I mean, it wasn't an expensive company. There was more concerns about, does the stock have a moat? Does the company have the potential to grow? Subscriber growth slowing down. Like, you could point to all these other different things, but valuation wasn't really the biggest thing to point to. So if one of the largest narrative flaws in the company, which is that they were going up against Big Pharma, and in this case, Big Pharma was suing the crap out of them, if that's over and now they're partnering, yeah, it makes sense for this thing to be up 50%. $23.26 in the pre-market. I mean, when it opens up, it's going to be a $5.5 billion company instead of 3.5. So it's one of those things where I think this one can squeeze pretty heavily, but it's also like the move has just happened 50%. Could the move continue to happen? Yeah. And I wonder, because, no shorts have really been able to cover yet because the markets haven't opened. So, I mean, if the shorts have to cover and you have a 40% short float, unless the shorts double down here, which is also a possibility, maybe that's the case. But again, given the nature of the news, I don't think that's going to happen. And if that doesn't, yeah, maybe this one is going higher. So if you're in it, congrats. Obviously, if you got in the 40s and 50s, you still have ways to go, but at least there's like the potential of life that is now in this name. And that's the cool thing about the stock market, right? As quick as things can go down, they can also go up, and vice versa. And one headline can change everything. And so for those that are deep into HIMS, maybe this is the headline that does change everything. All right, so that's what we had on HIMS. That stock is up 49%. Let me know in the chat if anyone still owns this name. I know a decent amount of people do, but I also know a decent amount of people like sold out of it back in the 20s as they were just getting annoyed by it. And looks like you got a reversal. All right, so let's get into all of the other headlines we've got going on. So I think we'll start with oil. As that was the biggest story of last night, and that continues to be a story that continues. Not only just oil, but the war in and of itself, right? Because the war in and of itself is kind of creating a lot more pain over the weekend, and that's also leading to what we've got with oil. So oil spiked up. Crude oil, which is what the United States price of gas is really contingent on, at $100. It's at 102 right now in the pre-market. It was pushing 120 last night. Why did it spike up? Well, you had a variety of headlines over the weekend that just were not that friendly to what's happening in the war. And, I spent a decent chunk of time over the weekend studying it, trying to understand it, go through different perspectives. And just based on every angle that you look at, you see that it is unlikely for this war to be slowing down. In fact, it is only intensifying. The biggest thing that happened over the weekend, some people might have seen this, some people might not have, but yeah, this is a real video right now. Iranian TV correspondent, as you can see right there, reports live from bombed oil depots in Tehran. Apparently, Israel struck some massive, not even oil facilities, but oil infrastructure in Iran. This is the United States was clear that this was not them that struck. This was Israel. And Axios is reporting that the United States was actually pretty upset that Israel did this because they don't want to burn the oil. They want to, monetize the oil. And when you strike the facilities to this extent, it, gets rid of the oil. And I mean, it looks like hell. Just honestly, it looks like hell. In the morning, people woke up Sunday morning and you had black rain, and that rain was essentially mixed with oil, and people could see black clouds and like oil falling in from the clouds in combination with the rain. Like, it was ugly. It was very, very ugly. And so that immediately got the market to think, wait a second. Not only do you have the Strait of Hormuz that is functionally closed, not only do you have all these different facilities that have said we are curbing the production of oil, now you have Tehran that just, we don't even know how many billions of barrels of oil just got taken out of production given the facilities that got hit. And essentially we have nothing else to say other than, well, prices have to go higher. And it doesn't seem like it's unlikely that prices are going to go lower. Here's a couple clips over the weekend of the administration talking on the Sunday shows, but that attack combined with what has happened over the past week, Kuwait, Saudi Arabia, Qatar, I mean, there were so many different headlines around different things that are going on with their oil processes. That's, I think, what has led to oil getting above $100 a barrel.
So when the Qataris say you could see $150 barrel in oil, that's something America could stomach. President Trump wouldn't say, I'm done with this war because I can't stand the political pressure and the American people saying, I don't like what I'm paying at the pump.
No, the president's going to continue to stay focused on ending a 47-year conflict, stay focused on growing the global energy supply. This is actually part of that effort. It does involve a temporary impediment to energy production. But on the other side, it'll allow much more energy production and much lower energy prices. But this is not a long-term conflict. Most presidents have just thought, they'll kick the can down the road. The risk is simply too great to kick that increasingly dangerous can down the road. Yeah. President Trump's bold leadership is enough's enough. We're going to put it.
So again, the pain of oil prices basically is being hedged with an argument from the Secretary of Energy and from the administration, which is that we need to end the broader conflict and focus on that more than just oil prices in the short term. Here's what he said about the Strait of Hormuz as well.
Going to come to an end.
So one of the reasons for the spike in prices at the pump is roughly 20% of the global oil shipments pass through the Strait of Hormuz. That traffic has ground to a halt since the war began because of Iranian threats. The Trump administration says that the U.S. Navy has offered to start escorting oil tankers through the strait. Have any oil companies taken the Trump administration up on that offer? And when might those escorts begin?
Well, a large tanker went through the Gulf about 24 hours ago, through the Straits of Hormuz. So we're still focused right now on continuing to attrit their missile and drone capability to reduce their ability to disrupt traffic, to attack their 10 neighbors that they have been attacking. And that work is going tremendously well. Their missile launches are down by 90%, well over 80% reduction in their ability to fire drones. So yeah, we're not too long away, I think, before you'll see more regular resumption of ship traffic through the Straits of Hormuz.
So you have the Secretary of Energy basically confirming, yes, we don't have regular traffic from the Strait of Hormuz right now, but it will take some time and we'll get there. But he is acknowledging that like not a lot of countries are taking up the offer to be escorted through that Strait of Hormuz. Again, a lot of other countries are thinking, hey, I don't want to get in through some massive conflict if the Iranians are blocking it. And then this is the biggest thing that happened on Friday. Bessent said we might have to unsanction Russian oil to ease up prices.
The Indians had been very good actors. We had asked them to stop buying sanctioned Russian oil this fall. They did. They were going to substitute it with U.S. oil, but to ease the temporary gap of oil around the world, we have given them permission to accept the Russian oil. We may unsanction other Russian oil. You know, the other thing Treasury can do here, Larry, is there are hundreds of millions of sanctioned barrels of sanctioned crude on the water. And in essence, by unsanctioning them, Treasury can create supply. And you know, we are looking at that.
So again, a lot of people are saying, well, wait a second. As N7 says right there in the chat, by doing that, you're going to help the Russians essentially fund their war in Ukraine. So it is altogether just a mess in terms of what's happening with oil. And again, from a political perspective, either you agree or disagree that the Iran nuclear threat is worth going through this. Trump did tweet yesterday telling his base to remember that this is a very small price to pay for the Iran nuclear threat. He quoted, "Short-term oil prices, which will drop rapidly when the destruction of the Iran nuclear threat is over, is a very small price to pay for the USA and the world. Only fools would think differently." Either you believe in that or you believe in the opposite, which is that you don't really care about an Iranian nuclear threat and you care more about affordability. And I think, those two sides will be at conflict over the coming months in the entire United States. So why did oil drop in the morning from 120 to 100? Well, you had a headline from the Financial Times, which hasn't really been confirmed yet, but it's enough to get the markets to relax, which is that the G7 countries are coming together to discuss the joint release of emergency oil reserves. There are about 1.8 billion barrels of oil throughout the world, at least when you combine the G7 countries, not China and Russia, in the strategic petroleum reserves across all of these G7 countries. And the headline states that 400 million out of the 1.8 billion will be released into the broader ecosystem of supply, which will be good because when you have 400 million barrels of oil coming into supply, that should technically raise prices down or technically lead to prices coming down. And that's where we saw 120 go to 102. Again, not a massive decline, but compared to what has happened over the past month, oil is up 100%, but enough to get the markets to calm down a bit. That's when the pre-market started turning. This was around 3:30, 4 a.m. when things got a little bit better for equities based on this headline. However, the problem is for the United States, and this is just one of those things that unfortunately the timing got bad. Biden ended up draining our SPR to the lowest level in 40 years back in 2022 because oil prices were basically at these levels in July, and Trump has barely refilled it. And I just wish that we had considered when oil was 60, 70 a barrel, even at one point we were at 40 earlier in the year back in December as well. We could have massively refilled the SPR, spent the money, been able to get to peak. We were at 400 million barrels. We could have got to 700 million. When oil was low, there's no way we could afford to. We could fill it up right now, but we would just be paying a massive price versus if we had done it before this entire war broke out. So I think this was definitely a miscalculation by the Trump administration. If they knew they were going to war, unless this thing happened over the span of 24 hours and there wasn't strategic planning over the past months for this, that we should have definitely increased our oil supply. And maybe Trump just didn't expect that the price of oil would spike to these high levels if he were to go to war with Iran. But now looking in hindsight, it seems rather obvious that if we were going to go attack one of the largest producers of oil that controls the Strait of Hormuz, then yeah, there would be some issues. And so that is why things have kind of calmed down in the pre-markets versus where they were at last night. But quite frankly, when we look at it objectively, I don't know if this is going to be calming down anything. The only thing that's going to calm things down is if the war actually comes to an end and oil is able to freely flow through the Strait of Hormuz, and not just the Strait of Hormuz, but the facilities in Saudi Arabia and Qatar aren't getting bombed and attacked with drones so that they can freely produce oil. If that doesn't change anytime soon, I don't think this headline about unleashing 400 million barrels of oil is going to meaningfully change anything. But according to Trump, his argument is that this is not going to be ending anytime soon until Iran unconditionally surrenders.
Can you give us an idea of what unconditional surrender looks like to you? What do you want from Iran?
I said unconditional, not conditional. I said unconditional. It's where they cry uncle, or when they can't fight any longer, there's nobody around to cry uncle. That could happen too, because we've wiped out their leadership numerous times already. So it's if they surrender, or if there is nobody around to surrender, but they're rendered useless in terms of military.
Can you give us an idea?
So until the Iranians cry uncle, this thing is not ending anytime soon. And I don't know, guys. It feels like this is going to last for a while. I don't think oil prices are going to be coming down in any meaningful way, again, unless something dramatic happens. But as of now, it looks like they are going to continue to stay at these levels. And as a result, the market's going to have to react to it. Now, again, because of the fact that the market started to move forward a couple hours ago, once we had this headline, you could tell that the markets don't really want to go down on these oil headlines anymore. At least in the time being, they had enough pain last night, and they had the S&P was down 2%, now it's down 1%. So recovering 50% of your losses is nice. But when the markets actually open in the next 25 minutes, I really wonder how the big guys think of all this momentum that has happened over the weekend, because a lot of them have not even started trading yet. And what does that mean, right? What does it really mean for them to consolidate and recognize that these prices are likely not going lower unless this ends anytime soon, which again, that's more political. Do you think it's going to end in the coming 4 weeks, as Trump says, or do you think it's going to take much longer than that? Bitcoin, by the way, this one also showing that the markets are a little ready to move on, in my opinion, based on this G7 headline. We were at 65 last night. Now we're at 60K. So you had a nice $3,000 candle over the past 24 hours as risk on assets continue to get a little bit of movement to the upside. Gold and silver also were not really your safe havens last night. Gold is down another 1.46%. Silver is down 0.5%. So gold and silver continue to get hit. And unfortunately, we're not really seeing much of a change right there as well. Now, Steve Witkoff also, which is the special envoy to the United States, tried to give a little bit of context for why this war had to happen. He was one of the main people negotiating with the Iranians. And here's what he said on Friday about why military action probably was the only action going forward.
They didn't seem to be very amenable in those first set of negotiations. You heard what I said. They said we have the inalienable right to enrich. They bragged about having 60% enriched fuel, enough for 11 bombs. And they told me and Jared, we're not going to give you diplomatically what you couldn't take militarily. So, I think they're going to need a change of attitude.
What sort of thing do you want to see in a deal? I mean, do you think you have maximum negotiating leverage at this point?
I think the president has proved that we have.
Iran today accused the U.S. of
a lot of negotiating leverage, maybe maximum, but we're not looking to settle. They'd like to settle. We're not looking to settle.
Iran.
Either you believe it or not, but Steve Witkoff saying that we tried to negotiate diplomatically and nothing worked diplomatically because they continued to want to enrich oil. And as a result, there was nothing else we could do other than, actually attack. So that's what we got. That's what our elected officials are saying to us. Time will tell if this ends up working out or if this becomes a mess. But as of now, oil prices being this high are not the best. Ondas right here, up 4.63%. We got a headline from Ondas. Ondas reaches merger agreement with the U.S. defense prime contractor Mistral, expanding direct prime participation across U.S. Department of Defense programs. So looks like is that Ondas acquiring a company? It says merger agreement. No, I don't think that merger is just a word for it, but I don't think that's necessarily an acquisition. Ondas said Mistral is active on U.S. Army and SOCOM contract vehicles worth $1 billion and also adds U.S.-based manufacturing and integration infrastructure. Actually, it might be an acquisition. I will take a look at that. But Ondas right there, 4.3%, as that one is getting green. Yeah, it does look like an acquisition. We'll get some more details on it. It came out just now. The drone stocks, again, they've continued to catch a bid. And the reason they are catching a bid, Red Cat right there, up 8% in the pre-markets. They have been choppy back and forth. But, I mean, this doesn't look like this war is ending anytime soon. So if people thought it's going to be like a one-week thing, that's likely not happening, which means we're going to need a lot more military weapons. Trump did say over the weekend he had a closed meeting with defense contractors, Lockheed, Boeing, Northrop Grumman. All of them were at the meeting, and they said they are getting ready to quadruple their supply for being prepared in terms of supplying ammunition, jets, guns, tanks to the United States. So it looks like those defense contracts are only going to get bigger and bigger. Raytheon right here, that's also up in the pre-market. Same thing with Lockheed Martin. And that means the smaller drone companies are probably also going to start getting some more momentum. We got another headline from Bloomberg. Saudi Arabia has started reducing oil production as the near blockage of the critical Strait of Hormuz starts filling storage tanks. So Qatar, Saudi Arabia, and Kuwait have officially said over the past 72 hours they are now going to stop producing, at least in some facilities, because of storage concerns, and they just don't know what to do with the oil. And, that's another reason why oil prices are getting more of that momentum. Again, the reason why HIMS is up 44% is because the Novo lawsuit has been dropped. So if you are a HIMS shareholder, you are waking up to that good news, and hopefully the market's able to respect it. I mean, again, it's sold short by about 40%. It's up 40% right now. So this thing going up 60, 70% would not surprise me if the shorts have to cover. But if the S&P dumps, 2% when the market opens, it's already down 1% right here, then obviously the macro could potentially hold this one down. But HIMS right now up about 45%. UMAC, that's another drone stock. That's up 13%. Again, the drone names, they are thematic right now, but this market has always been about themes. Really, it's been a stock pickers market, and that stock pickers market has been rooted in what themes can you kind of meaningfully get into. And drones right now seem to be the right theme. Oil's not really pumping in terms of the actual oil companies. XLE's up 1%, but Chevron, ExxonMobil, they haven't really seen that massive bid because at the end of the day, they need to be able to sell oil. And so if oil continues to surge at these levels, it's good for their profit margins, but it's not good for their volume in terms of being able to actually sell it if the critical flow of supply has started to wind down. VG, though, getting some love. Well, it was actually up 14% last night. It was pushing $15. Now it's at $12.94. So even this one kind of taking a bit of a breather, although it is up 100% year to date. A couple other headlines from the AI space that are also really important and will influence what happens this week. Before we get into that, though, Iran has picked a new supreme leader, which is the son of the old supreme leader. So you have a new guy who is the, again, son of the previous supreme leader. I don't know how to say this guy's name, but nonetheless, this is the guy. I'm not even going to try to say his name. The thing I read about him over the weekend is that he is worse than his father in terms of anti-U.S. sentiment. He's not a fan of of the United States. Let's just say that. And now he just saw his father get killed by the United States. He's seen many family members get killed by the United States. Just call him Junior. Yeah, Junior. He's the new supreme leader. So, I mean, there's now a target on his back because I would imagine the United States wants to get rid of this guy and Israel. So, I mean, he's going to be constantly hiding throughout this war, I would imagine, with the United States. And we're going to have to see if intelligence is even good enough to continue doing what they did a couple weeks ago. But also, it's like, well, we don't have a new regime, right? And, over the weekend, you had the Washington Post report that Trump has privately hinted to his cabinet officials that he is not opposed to putting boots on the ground, which makes sense at the end of the day. Not that I want boots on the ground, but it is going to be, in my opinion, quite impossible to just use airstrikes to instill regime change. I mean, the only way you really do that, the only way you, and as grim as it is, and I kind of went through this rabbit hole over the weekend and remembered what happened in World War II, is you drop a bomb that is so explosive that the enemy has no choice but to unconditionally surrender. And then you plant your own regime inside. If you're not dropping a nuke, if you're not doing anything to that extent, airstrikes at the end of the day, I mean, it's going to create damage. It's going to create pain. I don't know if it fundamentally gets rid of the regime unless you have boots on the ground that are actually, even if they're Iranian-backed rebels from the United States, that actually, get people to leave. So I don't think Trump wants to watch a nuke. I hope he launch a nuke. I hope he doesn't do that. There was some reporting in the Washington Post that Israel has signaled that they would be curious enough to think of doing that. Again, that would be catastrophic for the entire world if that were to happen. And so if you don't do that, then you need to have boots on the ground. So it makes sense that Trump is thinking of putting boots on the ground because, there might not be another solution. But if you have a new supreme leader that's already in place, that is the son of the guy that you got rid of, I mean, are you just going to get rid of this guy now? And then if they put someone else who's part of it, or are you going to actually instill boots on the ground to be able to make sure that the Iranian regime that you don't want to have won't have them? So, I mean, it is just a mess all around. And I don't know exactly how this is going to play out. But if you continue to have people in the regime that are elected to positions of power, you're just going to have to keep killing them. And if you don't keep killing them, or you don't have boots on the ground to install your own regime, then they're going to just keep staying in power. Unless you blow up all the oil facilities and then just ruin the entire country. So it is just confusing in terms of how this is going to play out. And if the American people are going to buy any excuses of what would happen. And then, to make things worse, you had Carolyn Levitt over the weekend insinuate that, well, there could be a draft. She didn't explicitly say it, but she said Trump is not going to rule out the possibility of it. And so now you got a lot of Americans thinking, wait a second, do I have to go and fight this war if it were to happen? Which is not making people feel that happy either.
Mothers out there are worried that we're going to have a draft, that they're going to see their sons get in and daughters get involved in this. What do you want to say about the president's plans for troops on the ground? As we know, it's been largely an air campaign up until now.
It has been, and it will continue to be. And President Trump wisely does not remove options off of the table. I know a lot of politicians like to do that quickly, but the president, as commander in chief, wants to continue to assess the success of this military operation. It's not part of the current plan right now, but the president, again, wisely keeps his options on the table.
Mothers out there are worried that we're going to have.
And this is why you had a lot of these articles over the weekend speculating nuclear, boots on the ground, yada, yada. I mean, the Trump administration has not taken anything off the table. And so when you have all these different ideas that are being pontificated, you get a lot of people wondering how catastrophic is the United States thinking of going with this, whether it's boots on the ground or something worse. And that's why it seems like we're going to be stuck in this for a very long time. So if I can't do the market open anymore, because I get drafted into this shit, then I'm sorry, but it's getting kind of ridiculous. And, public opinion, I think, is not really on the side of this war as of now, but I guess the progress of the coming weeks will give a much clearer picture in terms of what's playing out. S&P 500 right there, that is also still now down 1%. All right, so let's get into some more of the macro. So first of all, let's talk about what happened with Oracle. Oracle came out this morning. They said that report by Bloomberg that said we are not working on a data center is unequivocally false, and that we continue to make progress. So it looks like Bloomberg pretty much ended up getting wrong sources for this. They said Oracle was not going to be licensing this spot, and then Meta and NVIDIA were going to be licensing it instead. Oracle said recent media activity about the site in Texas are false and incorrect. Crusoe and Oracle are developing a lockstep to deliver one of the world's largest AI data centers at a record-breaking pace. 2 buildings are completely operational, and the rest on campus is on track. So that's what you got with Oracle, and you are seeing, that stock at least get a little bit of momentum based on what happened on Friday. Literally it's still down 1% in the pre-market, but it was down a lot more last night. Literally at 350, market closes at 4, which, by the way, the reason I'm early for some people here is because we had a daylight saving time in the United States. So we lost an hour last night, if I'm not wrong, which means we're an hour early for a bunch of people internationally. So that's why we are starting early for some people, I think, watching from Europe. But the interesting thing about the Oracle story is that at the end of the day, Oracle is saying, hey, not only do we need to put up the level of growth that is necessary to show our RPO, remaining performance obligations, stay intact, but we also need to prove to the market that Oracle and OpenAI still have a collaboration, and OpenAI is willing to pay this money. So 10 minutes before the market closed on Friday, this news dropped. NVIDIA went from 183 to 177. AMD dropped. Broadcom dropped. Broadcom's at 340, fell all the way to 332. Like, you just had a bunch of these names that could not hold on to their momentum because of this headline that ended up being fake, which to me, the takeaway is that the market is once again on edge on any headline around AI that's bad. And, this Oracle OpenAI headline was another one, which was not the best. You were still late. Yes, I was still late. I was still 2 minutes late somehow, even though the world decided to make me go an hour early. Rubio's about to go live. We'll see what Rubio has to say. He's been talking a lot over the weekend as well. Trump mentioned that Cuba is next, by the way. Trump said that over the weekend that Cuba is going to be the next target that they have. I mean, quite literally, he's saying we could end up having a friendly takeover of Cuba, which was the quote on Friday, which, got me into a rabbit hole over the weekend. I learned a lot more about the Cuban Missile Crisis, and I thought I knew enough about it, but I just started learning a lot more about what happened back in 1962, and calmer heads prevailed in terms of the head of the USSR and John F. Kennedy when agreeing to take the nukes out of Cuba, and then for the United States to secretly take their nukes out of Turkey. But man, were we close. We were freaking close to not a world war, but basically the end of humanity if we went back and forth. And, it's just kind of crazy. That situation was about Cuba, and now you've got the administration potentially thinking they can take over Cuba, which was again the concern that the Russians had back in World War II. So it is just an absolutely crazy to see how this is all playing out. But there's also a lot of momentum in terms of how commodities are tracking all these quotes. And when Trump says something like that, you kind of get commodities thinking, okay, maybe this could be good for oil, but you also have a lot of people thinking, wait a second, this is going to create more instability, and it's not going to be good for oil. And the part of the reason where it's the worst for is Asia. So you can look at this chart right here. Asia is most dependent on oil and LNG from the Middle East. You can look at the share of crude and LNG transport by destination. Asia, Europe, and the rest of the world. Asia and Europe. Europe is the light brown. Asia is the yellow. It's almost 80%. It's almost 80% for both of them. So, yeah, we're going to get better cigars. It's not good for Asia in terms of how we have oil and LNG being transmitted. I mean, obviously, this has been really bad for South Korea. South Korea had a limit down last night. Their index Kospi fell 8%. Samsung and SK Hynix were down 10% again. That thing, Kospi, the index, was up 50% year to date. Now it is up 20%. So it has fallen a full 30% from those highs. Samsung and SK Hynix have also taken a hit. Micron, SanDisk also taken a hit. And a lot of this being contingent on the fact that South Korea gets a ton of their oil from Iran through the Strait of Hormuz. Yardeni, who's been a massive bear, Ed Yardeni, he came out and said, we can't rule out a bear market if investors start to anticipate a stagflating 1970s scenario. We are lowering our bull melt-up scenario from 20% to 5% and increasing the meltdown scenario, which now includes a 1970s style stagflation, from 20% to 35%. So even Yardeni, who's one of the biggest bulls out there in the market, comes out and says, look, if oil is going to be as bad as it is, Japan ended down 5.2% today as well, then we are not going to rule out the possibility that this results in stagflation, which is what it's going to do. A lot of people are saying we're going to have so many deflationary forces that it doesn't matter if oil goes up. And I just fundamentally disagree with that, because even if you have oil prices go up, or even if you have AI that creates some type of deflationary force, oil going up is going to be inflationary no matter what people think. The reason tariffs weren't as inflationary is because it was a one-time cost on the consumer that was something the consumer was able to eat, or companies ate that cost. So you saw inflation from tariffs, but you didn't see it come up in PCE consistently because you didn't have new tariffs consistently. It was like a one-time thing, kind of was consumed over the course of 5 months, and then you moved on. If oil continues to go higher, I mean, there is just no world in which I don't think inflation goes higher. And if it stays at these levels, you're looking at around 3.5% inflation, which was the highest since September of 2023, going into the end of the year. Again, the Fed wants 2% as their target. And if the Fed doesn't get 2% of their target, they're likely not going to cut. But even if we're at like 2.3, 2.4, it makes it more conducive for the Fed to say, oh, we can cut because maybe the labor market's weakening. Maybe eventually AI is going to create deflationary forces. But it's not like AI is deflating the entire world today. And it's not like the labor market is just losing hundreds of thousands of jobs every day. So those natural elements of deflation haven't really come in yet, which means, if we spike up oil, I don't see how there's any world in which we don't have inflation. Like, there's just like, in my head, there's no debate about it. Like tariffs, there's a whole more nuanced debate. With oil, gas prices are now pushing. I mean, I just saw in New Jersey, it was at $3.99. It was at $2.50 last week. It was at $3.99 last night. And so to me, I'm like, okay, that's immediately inflationary. And, forget what it means on the average consumer in terms of prices, which is already horrible. What does it mean for how the Fed is thinking of cutting rates, which for all of us as investors, we need these low cuts. We need these low rates and more cuts to be able to help risk on assets. I mean, it's just not going to be the best. It's really not going to be the best. This is another chart that I thought was really important about oil that's creating more momentum. Backups in the Persian Gulf, filling storage and production cuts by Saudi Arabia signal the conflict is shifting from military to economic shock, risking slower growth and renewed inflation pressures worldwide. As you can see right there, the average barrels per day are now dwindling in terms of the actual monthly exports of gasoline, diesel, jet fuel, and fuel oil, which is also not good for GDP. I mean, you've got issues with GDP increasing or decreasing as a result of demand decreasing, which might be good for deflation. But, if we cut rates, but demand is dropped off a cliff and earnings have fallen off a cliff, then that's not going to be the best thing either as well. A couple other macro stats. We have about 4 minutes until we get into the market open. This is from Bloomberg. Hedge funds increased their hedges against single stocks long positions by increasing their short position in equity ETFs by 8.3%. As per Goldman Sachs, the pace at which the cohort deployed their bearish bets was exceeded just once in the past 5 years post-Liberation Day. Essentially, hedge funds are starting to short more equity ETFs to be able to cover their long positions. And, the reason they're going short, obviously, is because as oil prices increase, there's going to need to be some level of momentum to the upside or to the downside if we end up getting a pretty ugly print as oil continues. And then here's another chart that I thought was really interesting. February was the 5th strongest month on record for individual investor equity purchases. We talked a little bit about this last Friday. Retail investors have now purchased stocks for 26 consecutive months. By comparison, 2020 to 2022 period saw 29 straight months of buying. The average daily retail options volume are now 14% above 2025 levels, 47% above the 5-year average from 2020 to 2025. So we are seeing retail continue to aggressively buy the dip. And one of the stocks that they're buying the dip on is the United States oil ETF, USO. It had a record $36 million of inflows on Friday as individual investors are piling into oil funds, which are doing well. I mean, we saw retail buy a lot of SAS over the past couple of weeks, and that has ended up working out. And now you're seeing retail sort of get into oil, kind of transitioning more active portfolio management. And so far that is working. Now oil is going to have to stay elevated for those funds to continue to be strong. But at the end of the day, you're seeing retail try to navigate the markets, and the way they're navigating is not by staying in cash, but rather diversifying and, you know, going with the trends. And the trends right now are to buy the dip and to get into sectors that have continued to do well, which in this case is what you're seeing with oil. I thought this chart was also interesting as well. In February alone, purchases on down days for the S&P 500 were 4.5 times higher than up days, rising from 2.1 times in January. Basically, individual investors have consistently bought more on down days than on up days in each of the last 7 years as per February. So massive, massive levels of buying. Retail is, if not calling a bottom, saying that we don't care if it is the bottom or not. We are going to continue to allocate capital. Money market funds continue to be at a record $8 trillion. We'll do the green or red poll right now in the chat. But I mean, regardless of how much retail tends to buy, the question is going to be, will oil actually get to a level that's sustainable? And if it's not, you know, how much of an impact does it have on the broad economy? Last night, we were at 120 a barrel for oil. We are now just below 100 as we get into the market open. Crude is at 99.34. So you're seeing that level of relief, which is helping the equity markets. And in about 30 seconds, we'll see if this actually ends up changing the futures. And do we go green, or do we end up staying red on the day? We'll also keep an eye on HIMS, as that one has officially signed a deal with Novo. We'll see if there's going to be a short squeeze here. I know a lot of people are positioning for it, up 50% right now. The stock is sold 40% short. See if there can be any change. S&P 500 as well is now down about 1% right before getting into it. Bitcoin getting a little bit of a bid right here. Maybe trying to move back above 69, 68, 70 as we get into it. All right, here we go. Monday, March 9th, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. All right, wake your asses up. Let's get into it. HIMS goes up 48%, 2320. Volume is already 26 million shares in the first 10 seconds of trading. So you got a lot of orders that are getting executed right now. 22.95. Let's see if this thing can actually get above $25, make its way towards 30, or if it kind of stays in this range. 23.30 right there. That's up 47%. Lockheed Martin, 675. That's green. Raytheon, 211. That's also green. Ondas, that loses their entire pump. They were up 5% pre-market. That one ends up going red. Palantir, green. 158. We did touch 161 on Friday before we fell after that Oracle headline came out. 158 right there. Palantir going up about 0.5%. S&P 500, that is actually getting a green candle. We were at 665. We were at 667 now. 667. Which is not too bad. Lumentum, they got into the S&P 500. That's why that stock is green. Unfortunately, SoFi was not able to get into the S&P 500. The 4 companies that got in were Coherent, EchoStar, Lumentum, and Vertiv. So those were your names. I was really surprised that Coherent and Lumentum got in. They are great companies, big companies, but did not expect the committee to pick 2 of those names that are essentially supply chain companies in the age of AI, but that's what they picked. And so those are getting some momentum. And then you had Vertiv, which definitely deserved to get in. Vertiv right there, that's up 5% after getting into the S&P. Broadcom, 327, that's red. Tesla, that's down 1.29%. That is red. Ethereum making a move here with Bitcoin. Ethereum back above 2,000. Robinhood should be going green. Robinhood's very close to going green, 76.80. How about NVIDIA? NVIDIA is green. NVIDIA was at 171 last night. So the fact that NVIDIA is making a move right here, actually, I think it was at 172.50, 177.60 is not too bad to see as that one tries to hold on. It was at 180 on Friday before that Oracle headline. SanDisk, 524. This is the lowest we've seen SanDisk in a while. Usually it bounces off 530. Now it's well below that 530 range. Oh, wow. It touched 508 last night. So you're looking at 520 on SanDisk. This thing was at 750 last week. CoreWeave, that's down 2%. Galaxy's down 1%. Cypher's down 2%. How about AMD? Is that green? AMD is getting a green candle from 187. It's still not green on the day, but 192 better than 187. NVIDIA now goes green at 178. Is HIMS still holding on? HIMS is getting sold off, guys. You probably got a lot of people taking some profits right here. But 2150 cannot break over 2463. It's up 36%. You do have, it looks like, some profit taking happening in him. Shopify, that's up 1.3%. 132. Rumble, that's down 2%. Adobe, that's flat on the day. ServiceNow, that's actually getting a little bit more green. Circle is up 7%. Circle was at like $70 last week. So you're seeing Circle continue to get some more momentum as that one's at 109.50, up 7.3% on the day. AMD right there, that's down 0.5%. Palantir again, 157.64. Amazon at 210. Delta 57.38. That's down 2.4%. Why is ELF getting hit? I don't. Wow, 7% down for ELF. This is also like last week. It took a 10% hit, and it didn't. I mean, it didn't seem like it made a lot of sense why this one got hit. ELF right there, down 7.76%. SoFi continues to go red. I don't know what's going to change the narrative on SoFi, but I mean, they are very close to going below $18. The only, again, we talked about this last week. The only narrative I can say is that Blue Owl is one of their biggest partners, and Blue Owl has a lot of perceptual issues around data center financing. And, you know, maybe the streets like Blue Owl is going to stop buying their loans on the loan book platform. Again, I think that's a stretch, but, you know, maybe that could be one argument for why the street feels a little weary about some of these neobanks. Qualcomm right there, that's down 1%. Tesla still down 1%. Apple, is that green? Apple is down about 1.18%. Shopify is also slightly up, but getting a bit of a red candle. HIMS again, it's just not holding on to a lot of the pump. I mean, it is holding on to a decent chunk of it, but if the squeeze was supposed to happen while it was up 50%, you're seeing it the opposite direction, which is maybe more people taking profits than people covering, which is giving the shorts the ability to cover at cheaper prices, creating some of this downside momentum. Adobe right there, that's down about 1%. Where's Oracle? They've got earnings tomorrow, 148.70. That's down 2.8%. Probably bringing down all the rest of the data center plays. Yep, Nebius, that's down 2%. CoreWeave, that's also getting hit. Google, are we red? Google is red. 296. 296. XLE, the energy ETF, that is down, goes red. Wow. Look at that. Where is Crude right now? WTI. Let's pull that up and see what we're looking at. We are now at 99.50, so still above 90. Very close to 100. ELF right here down 9.2%. How about Nike? Nike also down 2%. Nike 68 to 55. You would think after the tariff thing got overturned, Nike, ELF, Ulta, these retailer names would actually catch a bid. NVIDIA going red right here. Bitcoin very close to 69. MicroStrategy bought $1 billion of Bitcoin, by the way. They bought $1 billion of Bitcoin, 17,000 Bitcoin at 70,000 a pop over the weekend. So they do continue to stockpile some more Bitcoin. But they did buy $1 billion more of it. Netflix right there, 98. That's flat. Micron, that's down 2%, 365. Micron was at 430 last week, as that one is continuing to get hit. Redwire as well at 3.7%. That one is up. Rocket Lab, is that green? Rocket Lab is down 1.16%. The space names are not getting hit as bad as they were in the pre-market last night. ASTS also, I mean, ASTS again was at 103 last week. So the fact that it's chilling at 88 is not that crazy. That's one is down 1.14% as well. VRT, that continues to get some momentum. That's up 5.5%. Amit, what happened to your Reddit deep dive? So we published that about a month ago. the biggest concern I had with Reddit when it was at 230 at that time was valuation. Reddit's valuation is a lot more compelling right now. It's just there's a lot of opportunities that are much safer than Reddit, like Mag 7, that will not have Reddit's growth, but they also won't have Reddit's volatility to the downside. So, you know, after I studied the company, there is definitely a moat that I think Reddit has. I think it gets seen as this like stupid social media app and unfairly given the growth that they put up. But dude, like the beta in this thing is not attractive when some of these companies are sold off as much as they have. SoFi right there going below 18, ELF below 75. Although, you know, the valuation is significantly more compelling on Reddit than it was at 230. It's just, I wonder with oil prices this high, does the market even have the appetite for super high beta risky names? Right? And as a result, you know, I don't know. You're seeing Grab right there get below $4. I don't think it deserves to be below $4, but it is. And there's nothing that they said over the past couple of weeks that could have caused that. C Limited had earnings, and you know that one fell from like what 90 to 77 at one point. So I guess the entire international sector got hit. Nubank as well fell from 18 to 14 internationally. So that's the thing about Reddit. When it's that high beta, like if the market doesn't have the appetite to buy Microsoft or Nvidia, do they have the appetite to buy some of those names? SoFi right there, 1790, AMD 191, that's going red. Nvidia now she's falling, 176.40, starting to go red. Palantir going red as well. Tesla, another one that's getting hit, 387, that's down 2.5%. What about Bloom Energy? Bloom Energy up a little bit, although that's down from 160. Israeli official, we are concerned that Netanyahu will order a large-scale ground operation in Lebanon, and we do not want to be drawn into a quagmire. Wow. An Israeli official gave that quote to the Washington Post. I mean, Lebanon is a whole nother challenge in terms of what's happening with the potential ground operation there from Israel's perspective. That's the thing about when this broke out. You have so many geopolitical conflicts that are proxies as a result of what happened in Iran 2 weeks ago. And now you've just got a lot of countries going back and forth fighting each other, which, again, does not help any stability across the Middle East. Oracle right there getting dumped, down 4%. 4%. Amcor, is that getting hit? Amcor is also getting hit. You're seeing the semis once again take the beating today. SMH down 1% right there. SAS got the love last week. IGV is down today. Where did IGV bottom at? Let's go to the year to date. 76. Okay, so we're at 86. So 76, which was on February 24th. So it's been about 2.5 weeks. We need to hold above 76 on IGV. SMH potentially might be in the process of bottoming, but IGV, I think one could argue, has bottomed. What about Duolingo? Duolingo's at 102. As that is also now green on the day. We are at extreme fear, are we? Let me see. We got to extreme fear, folks. 25 on extreme fear. Historically, it's not a perfect indicator. The VIX, I think, just got hit at 31 as well. Let me get the percentage on that. Historically, buying during the extreme fear has worked out. VIX, 30 VIX. Yep, there you go, up 5%. I think this is the first 30 VIX we've had all year. We had a 60 VIX back in 2025 on Liberation Day. And that ended up being a, sell your kidney, buy the dip type of moment. I don't know if this is similar for one reason. And that one reason has to do with an incredible Mexican dish, which is tacos. I don't know if Trump can taco out of this war. I don't think it's as easy to do. I mean, he technically could, but given all the instability that has been already caused, you can't just say, oh, we're not going to tariff Zimbabwe. It's like, no, now you started a war. You can't just leave. Also, I mean, Trump's a legacy guy. He knows his entire presidency would be ruined if he just left the Middle East in shambles and didn't get what he wanted, which is a regime change. So if you can't taco out of a war, I don't know if, buying the dip results in the immediate V shape. Obviously, over time, I think some of these prices are a bit ridiculous. And they will reflect in something better years from now, but maybe not weeks from now, which is what we had in 2025. Trade Desk, that's down 4% even after the CEO bought 150 million worth of stock. Amazon right there, that's down 2%. Royal Caribbean down 6%. Carnival down 7%. The cruise line's getting hit even worse because of rising oil prices. Delta down another 4%. JetBlue down 6%. American Airline down 5%. United Airline also is down 7%. Goodness, the airlines and the cruise lines have just been incredible shorts if people got into them before oil prices ran up. But even if you got in the day after oil prices hit 85, I mean, they fell another 10%. So these to the downside have been strong. S&P lowest of the day, 1.27% down. 1.27% down. Redwire, a little green on the day. That's getting some momentum. Surprised Rocket Lab isn't moving green with it. It's trying to, but it's not. Figma is up 5% on the day. Figma getting some love. ServiceNow also is green. Some of the SaaS names are up. Some of them are down. ServiceNow, Cloudflare, Zscaler, Figma, Datadog are green. Salesforce, Oracle, Confluence, Snowflake, MongoDB, Atlassian, Adobe, GitLab, Intuit are red. Although Intuit, nice rebound from 350 to 470. They had a great earnings, but that stock's still down 2%. Was there really a TTD OpenAI deal? That was a rumor. It is not officially confirmed. So I think the stock ran more on the insider buy, maybe a little bit of the OpenAI rumor, but we don't have an official confirmation that OpenAI is going to be using TTD's technology to implement ads. Although the founder did say, Jeff Green, in his post that he thinks there's going to be like millions and millions and millions of opportunities for ad inventory inside of these chatbots that TTD can play a big role. And Meta right there, 629, almost at Bill Ackman's average. That one is also down 6.5%. I still don't get why ELF's down 10 on this news. Like, I get oil prices going up is not the best for most companies, but I don't know why ELF is getting hit this bad. That's down about 9%. 400 million barrels is about 40% of the G7 total reserves. I doubt they do that much. I agree. The headline was confusing to me as well this morning. Again, the reason why oil took a bit of a beating from 120 to 99 this morning is because of a headline that said the G7 countries are going to put out 400 million out of the 1.8 billion barrels of oil they have from their strategic petroleum reserves, which to me sounds ridiculous because, you need those in really, really bad situations. We're in a bad situation right now, but it's just prices that are going higher. So you wouldn't put out that oil just to calm down prices at the pump. You would put it out if it's a matter of life and death. Things are just absolutely horrible. And we're not literally there yet. We're not looking at $10 a gallon for gas. So I don't know. It is kind of crazy if they would actually do that. And that has not been confirmed. But if they do, it's a very short-term set of reliefs for oil prices if we're going to continue being in a war. SoFi right there, still below 18 at the moment. Circle is up 9. Circle is up 9. As that one continues to go green. Again, VRT, data center play that got into the S&P 500. That's why that stock is up 5%. IGV still down 1. Duolingo just went red. Rocket Lab also is red. Spain's finance minister just said we are evaluating how and when to launch a mechanism of support after oil prices have jumped. We got a new clip of Rubio right here. Let's pull it up as Rubio continues to make the argument for why we need to continue this war. Hegseth was also on 60 Minutes last night, and he continued to make the case for why this needs to happen.
The goals of this mission are clear, and it's important to continue to remind the American people of why it is that the greatest military in the history of the world is engaged in this operation. It is to destroy the ability of this regime to launch missiles, both by destroying their missiles and their launchers, destroy the factories that make these missiles, and destroy their navy. The goals of this mission are clear.
Similar to what Hegseth said last night. I mean, they keep talking about destroying their navy as one of the key objectives. And Rocket Lab going green right there. One has to wonder exactly what timeline they have to finish that. And, if they do completely destroy the navy, then what happens from there? JP Morgan trading desk, quote, "We are now tactically bearish. A definitive off-ramp to the conflict will end this tactical call as the underlying macro fundamentals remain supportive of risk assets. The S&P 500 is 3.2% below all-time highs, and this conflict risks pushing the S&P 500 into a correction. So you got JP Morgan saying we have officially turned bearish until we see an off-ramp to this conflict. And again, this is the same thing they did during the Liberation Day stuff, but the off-ramp was just Trump tacoing. Unfortunately, we don't have that taco scenario again. So you're going to need a different type of off-ramp that is going to involve a lot more geopolitical forces to make this play out. The VIX right now, 31.45. 31.45 as that continues to go green. Bloom Energy, that one spiking up 5.2%. So you're getting some of these risk assets catching a bid, like a Figma, like a Bloom Energy, like a Rocket Lab, which just flipped green. S&P still down 1%. Private credit still getting smacked. NVIDIA still down. The private credit stuff is getting ugly. We talked about it a lot on Friday, but investors called up BlackRock on Friday and they said they want redemptions, and they only got like 10% of what they asked for because, in certain funds, BlackRock, the fiduciary, has a legal authority to withhold their funds from being released. And, even if they can keep the money, it doesn't mean that the money is going to get marked to market at a value that's higher than what it was invested at, which is what's pissing off a lot of the private credit investors right now. Apollo down another 3%, Microsoft down 1%, KKR down 4%, BlackRock down 3% after falling 7% on Friday. Goodness, Blackstone down another 3%, Blue Owl down 2.2% as well. I mean, yeah, private credit is not going in a right direction. Bitcoin, though, getting some love right here. Look at that, 69.2 on Bitcoin. 69.2 on BTC, getting a little bit more love. VIX is now at 31.10, just dropped by 1%, which might be explaining some of the risk on momentum that we're seeing. S&P still down 1%. Google 296. Nebius just went green. All right, so your data center names are coming back. HIM's also trying to go green again at 2240. It was at 36%. Now it's at 42%. This is once again the game that we play every single day, where we dump, then we go a little green, then we dump again, or we open green, then we dump, then we open green, then we dump again. And so these short-term moves where the VIX goes down, the S&P goes up, and then the S&P goes down, VIX goes up. I mean, it's just been happening for about 2.5 months at this point. Every single day. App 11 right there, 511. That's also a little bit green. Bitcoin up 5%, gold down 2% on a risk off. Like, this is interesting. Some safe haven finally, or a fake pump. Yeah, I think it's more fake. Unfortunately, I think we need a lot more momentum to think that any Bitcoin pump is real. I mean, it makes sense, right? But it's made sense for the past couple of months. Every time gold sells off, Bitcoin goes up. Everyone's like, okay, cool. Rotation is time. Gold is, up 150% for the past year. Bitcoin is down 50%. So there should be some level of rotation, and it just doesn't play out like that. It plays out like that for like an hour, and then it just goes the opposite direction. Fear and greed. We were at extreme fear 22. This is a little bit more convincing, though, that even if the rally is fake, the dip might not be as aggressive as people think, or that we might be closer to the bottom. Now, we did fall to, in November, 4 on this scale. It was the lowest scale since Liberation Day. We hit 4 on extreme fear. That was back in November. And we are at 22, but around this range is when people, tend to buy. Now, having said that, VIX is at 3150. If we can get VIX up to like 40-ish, that's when it would be an absolute no-brainer buy the dip. Just because, once you get above 35, it's like, okay, it's pure panic. Right now, Rocket Lab's green. That's not pure panic. Figma's green. Pure panic is those assets getting Bloom Energy. I mean, these names shouldn't be going up if we're in pure panic. So we are definitely not there yet. HIM's right now still up 40%. Why was it 4 back in November? Because in November, I think people were freaked out by the crypto deleveraging. And that's what really kind of, got markets to be scared. And we ended up recovering, but we didn't recover that nicely. I mean, we went from 660 to 680. We fell from 695. So by December, we closed at 680. It was a recovery, but it wasn't like a V-shaped Liberation Day recovery. S&P lows of the day, 663.20. 663.20. VIX is at 31.59 at the moment. You're forgetting Trump is kind of the guy to bail out of here, leave it in chaos, and tell everyone it's more peaceful than ever. He could taco anything. Yeah, I mean, I think Trump could say we've reached a deal with the Iranians and like immediately announce an off-ramp, which would, probably spike up markets and reduce the price of oil. The problem is, what exactly would that deal look like? And if that deal leaves the new Supreme Leader who was appointed over the weekend, which is the son of the previous Supreme Leader in place, they don't get a regime change. And I think the way that they've been talking, Rubio, Hegseth, Trump, about what they're trying to do, again, this is why you're seeing all these articles talking about boots on the ground, because it doesn't look like they're lying about really wanting a regime change. And if they do end up leaving the region and don't get a regime change, then everyone's going to be wondering what the hell was the point of that? Like, why did we blow up all these oil facilities? Why did we strategically attack? Like, what was the point of it? So I think they kind of have to get a regime change if they want this to be successful, which means there is no taco, in my opinion. Unless, Iran literally surrenders because they don't want to keep fighting. But everything that we've seen over the past week shows that Iran is more than ready to keep attacking. Even if unsuccessfully keep attacking, they are not going to give up anytime soon. Which just feels like this is going to last for a long time. Yeah, I don't think you can taco war. Exactly. It's not a policy like tariffs that you just go back on. Circle right there, up 9%. Now, yeah, I agree with Nick right there. The Fed could start printing like there's no tomorrow if this Iran war starts leading. I mean, here's the thing. The ultimate bull case for risk assets, which will lead to one of the worst bubbles we've ever seen, but the ultimate bull case, if we're going to be cynical, is that the war gets so bad and inflation gets so crazy, and potentially that ends up hurting the labor market, that the Fed just says, screw it, we don't care about our target anymore. We're going to start printing because people need a relief. People need some level of relief. And the last time that really happened at an aggressive scale was obviously a pandemic. I don't know if this war is going to get that bad to the point where the Fed thinks that, but I mean, maybe that's your bull case for Bitcoin as well. If the Fed starts printing like that, then you might have risk on assets go to the moon. But that would be a bubble-ish form of printing. It would result in a 2022 scenario eventually. It would not be earnings driven, which has been the healthiest part about this bull market for the past 3 years. It's been based on companies actually putting up results. Because, I mean, realistically, 23, 24, we barely got rate cuts and the market went up. And 25, yeah, we got 3, but like it definitely wasn't the amount that people thought we would get. ELF still down 10% right here. So could the Fed print us out of this? Yes, but also Kevin Warsh is still a pretty big hawk. And as much as he might be quote unquote loyal to Trump, Apple down 1% as well. I don't know if inflation starts hitting above 3%, which it absolutely will if oil stays at these levels. If he's going to be like, yeah, I still am ready to cut rates. By the way, here's the heat map. Just disgusting today. You've got little pockets of green in some of these sectors, obviously energy, healthcare, consumer defensives. Everything else is just stupid. One of the EU officials says we have reflections on possible energy steps, and one of the options is to release more oil reserves. That was talked about this morning as well in the Financial Times article. Another EU commissioner saying that we must de-escalate the Iranian conflict as soon as possible. Looking at a couple of other headlines here. We talked about the Spain finance minister. Senator Cory Booker to unveil bill to make $75,000 in income tax free ahead of 2028. Huh. Okay, that's going to be interesting. Well, so, that kind of, that segues into what a lot of the Democrats have been seeing as their opportunity to strike. I mean, the thing about this from a political perspective is now Democrats are going to realize that if they can focus on economic policies, like potentially making $75,000 of income tax free, in a world in which affordability is getting hit pretty bad. Meta is getting hit as well, 628 now, down 3%. That's going to be their pitch for the midterms. And it's going to be a very easy pitch if this continues. Again, if this all reverses, then it's a different question. But if people are losing money left and right in the stock market, labor market, oil prices, I mean, they're going to be looking for solutions. Duolingo still down 1%. Tesla's now getting hit. You know, all of this should also be a tailwind for Tesla in terms of the transition to EVs. However, at the end of the day, it requires people actually going out and buying a Tesla, which in this environment, I don't know how much appetite there is for the average American to say, yep, I'm just going to buy a Tesla. I mean, it is a big journey to buy a Tesla. It takes a lot of research, understanding of it. You know, it's not just like buying a new car, like it's something new. So even if gas prices are up, you might not think the solution is, oh, let me just get an EV, even though it, you know, theoretically should help. 383 right there on Tesla. That's down 3.5% on the day as well. Broadcom, is that going green? Broadcom is slightly green on the day. Amit, if you hadn't built your grab position, would you consider buying more at these levels? Yes. Obviously, I think the stock is cheap right here. But look, I think realistically, people have to decide if they want to be long this story or not. And if you have a position and you don't like the story anymore because the stock has been flat, then you got to sell. You got to get out. I mean, there are plenty of opportunities that are going to move faster, not only because they're growing faster, like an NVIDIA, but because also they have a lot more interest in them, like an NVIDIA, like a Meta, that are easier to buy. So you either believe there's a super app thesis right here and want to see the story play out, or you don't. And if you don't, I think you got to get out of it. If you do, you hold on, and you know you have to practice some patience as an investor. And if you don't want to be patient, then I don't blame you. There's been stocks that I've not been patient on before, and I got out. But there's others that sometimes are, you know, you're willing to hold the course. I do think NVIDIA back to 200. It's just given the earnings growth they put up is not hard to see. Meta back to 700 is not hard to see. It's just the macro environment is pretty ugly. So are those at amazing prices? Yeah, I think so. And they're probably going to move way quicker than a lot of these smaller names. But you know, if oil stays at 100, I don't know how easily that's going to happen. Nebius right there at 90. Nebius, again, perfect stock for covered calls, has been stuck in a range from around 80 to 105. And that's given a lot of latitude for these covered calls. HIMS right there just below 22. As that's now down at 2160. Amit, do you know that Tesla is stopping the cars and shifting to Optimus robots? That's a great story, but they've got to actually ship the robots. As much as I love the humanoid robotic thesis, I don't think the market cares until Tesla actually puts some robots into the world. So yes, they're stopping production of the Model S and the Model X, but they got to sell these humanoids, dude. And humanoids, we don't even know if they're good yet. Like, we don't know if the AI is actually good enough for them to be useful. I think that story is just years and years away. I hope it's quicker because, you know, I would love humanoid robots to be a massive tailwind for the AI story, but I just think it's going to take time before it actually plays out. Yeah, why would you ship a bot that can't do anything? And right now, the bots can't do anything. Let's just be honest, dude. The bots can't. If the bots could do something, we would know. Like, we barely got in some videos from private companies that show the bots doing some laundry. Like, that's just not enough for people to pay thousands of dollars for, or for companies to want to pay for. So we're not there yet. I think we will get there. But right now it's a story, unfortunately. Reddit still down 4%. High beta coming after Reddit. That's getting hit. What scares me the most about this market environment is the IPOs. I love SpaceX, but how do they justify their valuation in this market? Like, how does Stripe justify their valuation? How does Databricks justify? Like, if these guys actually go public, it just feels more of a signal that things are frothy than anything. If they actually, you know, keep the valuations they're going for, even though they'll get bid up. And so I also wonder, you know, when regular companies putting up hundreds of billions in free cash flow are down year to date, what can these private companies actually offer to the public markets in a way that's not seen as just ridiculous overvaluation? And maybe SpaceX is different, but you know, we're gonna have to see when they actually do go public. Apollo right there, that's still down about 2.5%. Credit rating agencies are down. S&P Global, yep, that's getting hit 4%. How about Moody's? That's also down by about 4%. All of those getting hit as well. Yeah, the early dividend program for Robinhood probably starting in April. Probably starting in April as well. Tesla still getting hit right here, down 3%. I'm trying to see some of these other headlines coming in that are causing a little bit more pain. Bloomberg, Iran war threatens global fertilizer supplies. The Iranian conflict risks disrupting fertilizer production critical to global food as the Middle East hosts major plants and raw material exporters. About 25 to 30% of these raw materials pass through the Strait of Hormuz, now effectively closed. Iran, the fourth largest exporter in Saudi Arabia, faced supply hits, pushing Egyptian prices up 33%. Sulfur prices have also surged, with nearly half of global exports from the region, as it continues to threaten global fertilizer supplies. Well, looks like we now have an issue with fertilizer, as this war tends to bring issues in different areas. Oracle still down 3%. Palantir's been doing a good job holding the 150s, again, based on their perception of defense in this war, but a lot of these high beta names have still been getting hit pretty hard. Raytheon, that goes red. Red Cat, that loses its entire pump on the day. Red Cat now red. After that was up 8%. AMD, that's now flipping a little green. 192. I feel like choppiness is the word of the year so far. Choppiness is the word of the year. I mean, every day, these names just stuck within a range. And, you know, they're realistically not going to fully break out until the S&P breaks out as well. Big Bear, that's down 4%. Aero Environment, down 2%. IONQ, down 2%. Amazon, was that 217 last week? Now back to 208. As that one also gets hit. Yeah, kangaroo market as well. You could call it a kangaroo market, call it choppy. VIX is coming down. It's now back at 30 from 31. So you're seeing at least a little bit of downside move on the VIX, which should create some green candles. But for how long is the question? S&P 665. 662 to 665. Maybe you can call that a little bit of a breakout. But we're still red. App got upgraded to 750 today as well from one of the big banks. So, you know, they continue to like the fundamentals right here. Coverage on what's happening with some of these oil prices as this continues to go higher.
For the American economy, it's more about the U.S. consumer, and gas prices are rising. We know that. If you look at the price of gas across the country, it has risen about 20% since the war began. It's very different in places like California than, say, Kansas, which is the lowest gas price in the country. But we're still watching those prices go up. There it is, the national gas price average. And look, it's $3.48 a gallon right now, according to AAA, 17% increase from when the war began. The concern is around consumer companies. And so some of the research firms are starting to dig into who's most exposed. Wolf Research looked at coverage of some of the big retailers of who has the lowest income customer on average. I don't know exactly how they got this. They claim from the census and from, you know, their own research, but Dollar General, for instance, which reports earnings, $60, you know, low income, $60,000 consumer there. So that's where going to be most vulnerable because they'll be affected by the high prices at the pump. They have put Walmart in there, Advanced Auto Parts, Dollar Tree. We'll wait to hear, you know, because we're going to get retailers what the commentary is in some of these reports about sort of real time behavior changes, if any, from the consumer at some of these retailers because of the higher prices at the pump.
Yeah. We'll get Petco this week and Ulta, Dollar General, I think Dick's as well.
Yes.
And then Lennar Friday too, little housing data.
I mean, the retailers and the travel names have definitely borne the brunt. I think if there's a little bit of a silver lining, it's the levels we're starting from. So gasoline was cheap.
Yep.
Gasoline was cheap relative to its recent history. Gasoline was cheap relative to incomes. If you look at the cost of a gallon of gas relative to average hourly earnings for non-supervisory and production workers, it was near a 30-year low before this spike. In other words, you could buy 11 gallons of gas for the average hourly wage going into this.
Which is why Trump was bragging about gas prices being so low, because, again, historically, gas prices were super low. S&P, wow, look at that dump, folks. 665.96. I think that was actually less than 3 minutes ago before I played that clip. Right back down to 663. That is hilarious. Legit hilarious. I mean, what happened in those 3 minutes? Nothing. It's just chop. That's all it is chop. And the chop will be random. We'll probably see a green candle again later throughout the day randomly. Maybe oil's going up. Could that be the reason? Oil we went from 99.50 to 100.20. Okay, so we went up 70 cents. Maybe that 70 cents is what caused that candle down. But it's just hilarious. It is absolutely hilarious. But to their point, right, oil historically was at its lowest level. So if oil were to settle in around 70, 80, which is not good, but it would definitely be way better than where it is right now, even if we don't get to those absolute lows. But then this sort of like massive affordability narrative, we can kiss that goodbye. You know, if we're still sitting on $80 oil, it's not going to be as cheap as it was in terms of oil consumer prices back when it was at 50. And then it's just a question of American perception about why that happened. And if it's for a war, then it comes down to, okay, you know, do we support the war or do we not? But man, that candle, now it's getting ready to lose 663 is pretty crazy. Good call getting out of COPEX. Where is COPEX? Wow, 76. Yeah, that one was a gut feeling too. And the gut feeling was this thing is just following silver and gold. And I felt like more like I was chasing versus investing. COPEX right there falling 4% on the day. Again, if silver and gold go up, I think copper is going to go up as well. It's just right now you're seeing a lot of risk on assets, which silver and gold shouldn't be risk on, but like, I mean, they've been treated like risk on assets. If that starts to fade, then I guess they're not the safe haven. The only thing that's been a safe haven, the literal only thing, which once again is up on the day, you guys know what I'm talking about, is the USD, Dixie. The dollar has been the only safe haven in terms of macro assets. I mean, maybe you can say some individual stocks that have done well have been a little bit safe, but outside of that, this is what people, even bonds. Where's the 10-year right now? By the way, France just said there is not any plan to release oil stockpiles. That's probably another reason why oil just jumped. You got one of the G7 countries saying, we are not agreeing to any of this shit. Wow, look at the 10-year. Back to 4.2. I mean, yeah, this is not good. Objectively, this is not good. You would think people might buy bonds in the case of a geopolitical breakout of war across the world. Then again, why would they if inflation's going up? Like at that point, nope. Give me a better yield if you're going to take my money for 10 years. It makes sense why bonds are getting sold off. S&P below 663 now. I mean, that is, it's just, it reminds me of April of, or May of 2025 when stocks were going down and bonds yields were going up. Like, which is kind of what's happening right now. Not at the level that it was. I mean, we were pushing 5% on the 10-year back in May of last year, but yields going up and stocks going down means money is leaving the bond market. It's leaving the stock market. And, you know, that is bad for liquidity, bad for private credit, bad for everything across more macro assets. Maybe the only place it's going to go to then is Bitcoin. Who knows? Bitcoin right there up on the day. But it's not really the best scenario. It's not the best scenario. Portugal says it's key to keep some oil reserves. Portugal also says oil reserves are there for when supply is low. Okay, so we're not going to get Portugal to give up any of their reserves either. France says they don't want to give up their reserves. Japan is saying that we are urging G7 nations to release their oil stockpiles. And I think Japan can say that because they also are having a lot of issues when it comes to monetary policy. Again, G7 is Canada, France, Germany, Italy, UK, US, and Japan. So those are your 7 G7 nations. I also wonder how much oil Japan has in their stockpiles, as they would want to probably try to release that. Again, the Nikkei was down about 5%. So the determinant of a war should be, how does this affect my gas prices? We talked about this on Friday. And again, people can have their own opinion on this, but I just think it's important to also acknowledge reality. All of us care about the stock market. We follow the news every single day. We care about interest rates going up or down because we're in this. A, because we're investing. We have hard-earned money that we're allocating to these companies, and so we care about what's happening in them. And B, because we also love to keep up with the news. At the end of the day, it's a little bit of a sport for all of us. I really think we forget we are in a bubble, and the average American does not give a shit about the news. They don't keep up with interest rates. They could not name 2 people on the board of governors for the Fed. And they damn sure are not occupied with the geopolitical retaliation of an Iranian nuclear threat, especially if they're living paycheck to paycheck, which is the majority of Americans that barely have $500 in an emergency savings account. So to act like Americans are not going to be like, why the hell are my gas prices going up to free the Iranians from this dictatorship when it doesn't even really affect me, I think is naive to assume that they're going to care so much about what's happening in a foreign country. Like, I really think it's naive to be like the average American, a mechanic who's just trying to get by, take care of his kids, comes home, watches Netflix, does not turn on CNBC, does not have a Robinhood account that he's day trading options in. You think he's going to care about Iranian nuclear threats? Like, no, they're just not. You think a teacher who's making $45,000 a year is caring about nuclear war with Iran? No, but she cares about her gas prices. And so and Trump knows this as well. Trump is not naive to this, which is why he tweeted last night, it's a small price to pay for safety of Americans. And maybe that message will resonate. But if it doesn't, I really wonder what the referendum on the country will be like. And again, we can care because we actually invest. And so, you look at all these different things going back and forth. The average person does like that. And it's not like you're better because you care about this stuff. It's just that you choose to care. Someone else who is living in a totally different life, has different life circumstances, they might just not care. The beautiful thing about this country is everyone gets a vote, whether you care about the stock market, whether you not care, whether you watch the news, whether you don't watch the news. There's no, literacy test you have to pass. And like, do you watch the news every night to be able to vote? No, you're allowed to vote. Whether you care about the world or you don't care about the world, your vote matters. That's the guaranteed promise of this country in terms of the sovereignty of the individual being protected. And I don't know how many people in this country actually give a shit about Iran, even if you think they should. And that's why I think this is going to get very dicey politically. Sandus right there now going green on the day, 520 to 544. That's green. It's a privilege to care. That is also an argument. If you work from home and you're able to keep up with the news and you have a nice tech salary, it might be a little bit okay. You have the freedom to actually worry about a lot of this other stuff. Whereas if you're out into the world in construction, and you're working hard labor, and I never take that for granted, because that's something where those types of people, they don't necessarily care about this stuff because they can't afford to care about this stuff. They have to actually do real work. And I think that's the majority of Americans, which is what we cannot forget about. Rocket Lab right there, down about 2.65%. But that is the beauty of America. Correct. That is the beauty of America. And that's why we have different perspectives here. But I'm just like, I think for a lot of the people that are saying, oh, this is the most important thing we have to care about, and gas prices going up doesn't matter as much as Iranian liberation. That's your perspective. It's very important to recognize the other perspective, which really does not care about Iranian liberation because they are living paycheck to paycheck. They could care less about freedom for women in Iran, even if morally they should care about it. But if they're living paycheck to paycheck, it's going to be hard to convince them that they need to care about it, especially if they voted for a president who told them they were going to lower prices and now prices are going higher. VG right there, that is also still up 2% on the day. SoFi right now, 1791 continues to be getting hit. Dow Jones, where's the Dow Jones? That is not at 50,000 anymore. The Dow Jones is at 46,694, down 806 points. Down 806 points. Okay, so Pam Bondi definitely called the top on this. Definitely 22-22 on HIMS as well. Germany Steel Association, against the general backdrop and given specific uncertainties in the Middle East, decisive industrial policy measures must now be taken to stabilize energy prices. Okay, so you got the Germany Steel Association coming out. Goldman Sachs is saying that overall impact on real GDP growth would be 1.6 percentage points across the world if oil were to stay above $85 a barrel. That would also not be the best thing to see. Broadcom right there going a little green, 336. Grab still red. Moody still red. S&P Global still red. You have a lot of private credit continuing to still get hit. D-Wave down 5%. All right, we are continuing to see more and more red across the board. A lot of these headlines coming in are more to do with oil production slowing down. Not really seeing. Oh, did Trump just tweet? Trump just tweeted. Australia is making a terrible humanitarian mistake by allowing the Iranian national women's soccer team to be forced back to Iran, where they will most likely be killed. Don't do it, Mr. Prime Minister. Give them asylum. The U.S. will take them if you won't. Thank you for your attention to this matter. Wow. That didn't expect that from Trump. So Trump saying, do not let. Remember, the Iranian soccer team did not. We watched that video last week. They did not. They did not recite the anthem in protest to the regime. So yeah, when they go back there, I mean, it's not going to be pretty for them when they go back. So Trump right here basically saying either give them asylum or the United States will take them in if you don't. That's going to be quite the political event when those women, if the United States ends up taking them, those women coming off the airplane being granted citizenship in the United States. I mean, you could imagine Trump does a press conference with them. I mean, there would be a lot of different things that Trump does there, unless Australia gives them. That means over the weekend, they must have got intel that as soon as those women get back to Iran, they will be killed because of not singing the national anthem during the soccer match. That's got to be the reason why Trump tweeted that just now. Iran right there, up 1.3%. I mean, that's pretty incredible to not expect Trump to say something like that. And I think you're going to have to get more of those situations. If this hostility continues from the Iranian people in response to, the regime itself. Oracle still down 3, Palantir still down 2, S&P 663. 663. Yeah, I mean, he might not give them citizenship, but they would, I would imagine, get asylum in the United States. But look, the only way they could go back to Iran if they come to the United States is after a regime change. Because if the current regime is in place and he sends them back to Iran, I mean, yeah, they're not really going to be treated nicely. Meta right there, 628. That's still down 2.5%. Is oil still spiking here? Are we still seeing crude up? Crude 103.69. Yeah, it's spiking now. Now you're seeing a spike. The VIX should be going up as well. VIX is slightly moving higher, 30.88, still below 31. Iran is at 37. Where is Hood? Hood 76.50. Did he mean they will be killed by missiles? I am not assuming that he's talking about that. I mean, again, the only reason he's tweeting this, either he's lying or he has intelligence that says it's going to start to get ugly for these women. I mean, they did have a very public show of, hey, we don't respect the regime. We're not going to sing the song, the anthem. Maybe he's getting intel that things are going to get bad for them if they go back. Let's get some more coverage on oil, and then we'll keep going from there.
But it's not at $125 a barrel. You got Exxon up 0.5%, Chevron up 0.25%. You guys were talking about it. The markets, yeah, they're down a bit, but they're not collapsing. This is a huge difference from what we had last night. Jim was talking about waking up at 3 o'clock in the morning and checking the SPYs. I woke up at 3 o'clock in the morning just in a cold sweat, wondering where oil was going to go. I think a lot of this, I'd love to hear your guys' take, is options positioning. A lot of people, myself included, kind of caught out, not in a trading way, don't take any positions, but thinking that this would be maybe over or less severe 1 week out than it turned out to be. The Wall Street Journal headline, Iran, by the way, appointing Khamenei's son, kind of taking that hard line tone, fight to the end tone. And I think that caught a lot of people in the oil positioning out short, literally, where they had to cover last night. That set the biggest single day oil percentage gain in history. What we were up 30, 35% at one time. We're still up 10% right now at exactly 100 a barrel. Not saying that's good, but relative to where we were last night, it's not bad. One thing I want to note, when you look at an Exxon, when you look at a Chevron, when you look at a Marathon, some of these other names, they're at or even above the average analyst price target, guys. Look at
A lot of them up 30% year to date. We have a State's Department spokesperson on right now as he's talking more about what's happening in the Middle East.
36,000 Americans have returned to the United States from the Middle East since this began. And we've seen the State Department's 24/7 task force assist over 23,000 Americans. What I can also say is about over half of the Americans who have reached out for help that have then been contacted with U.S. departure options, U.S. government provided departure options, have turned down those departure options, either choosing to stay, another departure option. We're continuing and have surged resources to the region in order to assist Americans who want to come home from the Middle East to get back home.
Approximately how many Americans do you think are still trying to get home? Do you put it like ballpark in the hundreds or in the thousands?
Well, again, what we're focused on is assisting those that have registered in order to get back home. And that's why registering is so important, to express that interest. That's also why we're continuing looking at different options here, including commercial options where available. Like I said, we see over half of Americans who have reached out for help, when contacted, then turned down that U.S. government provided transportation option for another option or to stay in the region. So we're continuing and have surged resources. Like I said, we're committed to bringing every single American home that wants to come home, home.
I want to give you a chance to respond to some criticism from Democrats. A group of 8 Democrat senators penned a letter to the State Department, which says in part, quote, simply put, abrupt decision-making and lack of planning by State Department leadership to ensure the safety and security of its own staff left our personnel and their families unnecessarily at risk. Days into the conflict, the department still appears caught off guard and lacks a clear, comprehensive plan to safeguard American personnel, their families, or other Americans in the region. Tommy, some of the biggest criticism has been, why did State wait until after hostilities broke out to really get this plan in motion? How do you respond to that?
Well, look, we have contingency plans that are in place and ready to be activated. We saw the immediate activation of this 24/7 task force in order to assist the American people. We're also constantly evaluating the security posture at our consulates and embassies around the world. I want to applaud all of the brave men and women who have been working overcoming security challenges in order to bring Americans home. The fact that we've had around 24 charter flights leave the region with Americans, the fact that we've seen people working 24/7, hundreds of personnel proactively reaching out to Americans in order to bring them home should they want to come home.
The U.S. has been making the argument that most Americans should leave the Middle East completely, and the State Department will try to assist them. But across the entire Middle East, the U.S. is saying do not travel there, and if you are there and you're an American citizen, you should try to leave as soon as possible. We got an Iranian spokesperson from the military saying oil could hit $200 a barrel if the U.S. strikes on its energy infrastructure continue. Recent attacks, including Israel hitting Tehran refinery storage tanks, forced Iran to cut fuel allowances. Since the conflict began, Iran and its proxies have targeted oil facilities across the Middle East. I don't think we actually see $200 oil. I think that's a little aggressive. But we don't need to see $200 oil. If we have $100 oil continuing, for months, it's going to not be pretty for the markets. So it doesn't need to get that intense. Obviously, if it got that intense, that'd be worse. But hopefully we don't get there. Tesla right there, 383. As that's down 3.2% as well. Bitcoin continuing to catch the bid, 69. You're seeing a little bit of a rebound on the S&P, almost at 665 after going down to 662, right back to 665, once again staying in a range. Bitcoin was at 71 last week, now at 69.2. HIMS going down 23 to 21, still up 35% of the day. Did anyone sell their HIMS today? Anyone take some profits, get out of the position? Or are people still holding on? NVIDIA goes green by a couple cents, but NVIDIA going a little green. We did see 147 in 2008. Yeah, I mean, the after 2008, I think the next highest price of oil was July 2022. There were like moments in between that time, but July 2022 is kind of when we held it for a couple months, and that was also 5 months after Russia-Ukraine started. But we have not seen this in 4 years. Oil at 100. So, could it get higher? Of course, but this is not an administration that wants to see it continue to go that much higher. And the fact that we're thinking of unsanctioning certain parts of Russian oil, again, just to get that supply into the market to reduce prices, the ramifications is the Russians get to profit pretty heavily off that. Reddit right there, still down 5%. ASTS now down 3%. Google trying to go green, but that one is still down. I don't even think the market has got close to a bottom yet. I tend to disagree a little bit, not a fundamental disagreement, because I think earnings growth has been enough to sustain multiple compression that makes it feel like we are closer to a bottom. Like, when you look at Meta trading at 18 times, if the market hasn't gotten close to a bottom, that means Meta's got to trade at 12 times? At that point, we're looking at close to, 450, 470. Like, I personally just don't think a fundamental argument around the earnings picture justifies that. Having said that, momentum wise, yeah, I don't know if we've hit a bottom, because we haven't even had a 5% pullback yet, much less a 10% correction. And maybe we just need to rip off the Band-Aid and get one of those and move on, which was the good thing about April of last year. It was so quick, and then you move forward. This is more of a slow grind down. So I agree. I don't know if we've hit a bottom yet. I think fundamentally some of these companies are too cheap, and they would get way cheaper in that scenario, which could happen. But it also feels like, maybe the markets would be a little too aggressive in punishing them if it gets there. ELF still down 10% as well. SPY year to date, based on today's price action, is down 2.84%. It is down 5% from the highs. That is correct. Year to date, we started the year at 683. We're at 663 right now. So we're down 20 points for the year. VIX back to 31. VIX back to 31. The Trump administration, as per Politico, has been sending deportation flights to Iran in recent months and attempting to repatriate people there as recently as late February. Okay, I mean, that's probably similar to why Trump tweeted what he did about the Iranian women. I mean, it looks like the United States is trying to get people out of the region. AppLovin right there, 506. Microsoft still red on the day. Silver and gold still getting hit here as well. I think this is a trader market, buy low, sell high in different sectors, but with stocks, you have long-term or have good value. Yeah, I mean, for traders, it's actually been a decent market, although, again, for traders, especially if you're not day trading, you're looking for a trend. And if that trend switches every other day, your time frame becomes like a couple hours. It doesn't even become a week. And as a swing trader, I think, the average time is about a couple weeks when you're in a swing trade. But it's now realizing that it might have to be lower. Micron potentially going green right there on the day as well. I mean, why would we need a correction if the PEs aren't crazy high? That's a great question, and it's part of the reason why I don't think we need to have some 10% drawdown from here. But if I had to justify a reason for it, the reason might be that we've been stuck. I mean, this is a chart of the S&P year to date. It's just been stuck up and down. At some point, you would imagine either it's going to be a year where it literally just stays like this, or we break out up or down. And momentum is obviously a factor when it comes to consolidation, or after a period of consolidation. I mean, even look at 6 months. Look at this, 6 months. We were at 650. Now we're at 664. Companies have increased earnings way more than what we've seen on the move right here. So part of the reason might be we just need the breakdown to move forward. Also, I think oil could absolutely trigger a correction if oil stays at these levels. I think it's more likely than not that it does. And Trump knows that, which is why they want to fix it. It's already broke down. I don't think the S&P, dude, we're down 20 points for the year. That's not a breakdown. Not at all. Not in my opinion. 680 to 660 is not a breakdown. Now, Hood from 150 to 70 is the breakdown. And that's why this year has been so frustrating, because you've seen names get chopped in half when the S&P is, moved 2% down. But it does not mean the S&P has actually taken a meaningful haircut. Having said that, the reason some of those names that did take a haircut got hit is because I think they were obviously aggressively valued. And as a result, maybe the S&P doesn't need to take that 10% haircut because a Robinhood, a Rocket Lab already got hit so hard. A Bitcoin. But at this point, time will tell. IGV absolutely broke down. That is correct. IGV got wrecked this year. But who knows? I mean, maybe it created a real opportunity for retail. 120 to 76 is basically what you saw in IGV. It was at 120 September of 2025. Now it's at 76. Oklo, is that green on the day? Oklo is below 60. It is green. I don't even know it fell below 60. It was holding 60 for the past couple months now. But that is down. Not to mention the non-farm payrolls, again, just disgusting last week. Like, not good. Trump didn't even say anything about it because, I mean, he probably couldn't say anything to justify how ugly that report was. The most we got from the administration was the weather was bad, which, look, there is some legitimacy towards that. But negative 90,000 on a 50,000 expectation was not good. So again, I think the takeaway from all of this is the jobs report doesn't necessarily lean bearish until we see more of that continue, which I think we need a couple more months. The oil price is staying high does lean bearish if it continues. And so if oil prices stay high and the labor market continues to be weak for like the next 2 to 3 months, then you get into a situation where the Fed's definitely not cutting, even with Kevin Warsh. And as much as earnings are growing, the market's going to start to wonder, can earnings continue to grow if the labor market's collapsing and if oil continues to stay high? And I just think both of those scenarios don't have to play out, which is why you don't have to flip bearish right here. Because if one or the other goes the opposite direction, then boom, you have the earnings growth as the tailwind. And you don't have to go to the moon, you don't have to go to 8,000 S&P, but you definitely don't have to go back to 6,000. But if both stay in place, then it just feels like an uglier scenario. Apple right there, 256. As that one continues to get hit. We also have taxes this month. Yeah, that's also true. I mean, put in the chat if you have your money ready for taxes, because I mean, usually most people that are actively investing, they have to take the money out of their portfolio to pay for taxes. So, when people start getting those bills, they're talking about end of March, or even now is when people start planning, but early April, people are definitely going to start thinking, all right, it's time for me to not buy the dip and, if anything, sell to pay these taxes. I'm seeing 50% say yes. 50. Someone just said I just pulled out 35,000 from the brokerage. Yeah, I mean, that's likely going to have to continue for a lot of people. I still need one of my 1099s. Yeah, I just sent everything to my accountant, and I got back the number. It wasn't a pretty number. And now I'm like, all right, I'm going to have to take that number out of my portfolio. And it's just, I did it last year as well. It's annoying. Last year was worse because I had to do it during April, and April was the low. So it was so much worse. But I mean, that's something else that could probably affect broader trading volumes. Nubank right there, that's down 1%. C Limited, that's down 4%. Why no bell today? We did ring the bell again for a lot of people internationally. The US lost an hour for daylight savings. So I believe the show will be starting an hour early now for you guys. So yeah, your schedule, if you watch the show, is going to have to go back by an hour as we have officially lost an hour. You know, I was kind of wondering this morning what happened to the time. Like, things felt off. And I woke up this morning and I realized we had I had no idea that March 8th was daylight savings. I had zero clue. Like, nothing. There'd be nothing that would have made me remember that was actually happening. But I found out this morning. Marvell right there. Great earnings. That stock getting hit, though. Down 3% right here. Wow. 5 members of Iran's women's national football team have left the squad in Australia and sought refuge in the country, according to a statement by the communications account. Damn. So even those women are afraid to go back to Iran. If they are seeking refuge in the country, it once again proves why Trump tweeted that statement. It looks like those women themselves are afraid to come back to the country. Bloom Energy still up 9%. It's coffee time. I don't know if coffee is going to save anything here. Yeah, look, I mean, that's also fair. Obviously, they would not want to go back to a country that is dealing with war. S&P highs of the day right here. Highs of the day. I ran up 2%. Let's see how long this thing can freaking last. We're seeing a little bit of momentum here, but how long can it actually last right now? Do you have this is the Israeli ambassador to the UN. I think he's live right now. Let's see what he's saying here.
To the choice of the Ayatollah Ali Khamenei's son as Iran's new supreme leader, because someone President Trump had earlier called as unacceptable.
Thank you for having me, Wolf. So it's more of the same. You know, when you look at the actions of the regime, they will continue with their nuclear ambitions, with the ballistic missiles, feeding the proxies. So, you know, like father, like son. So we know that we will have to continue with this operation, and we will degrade the capabilities of Iran, and they will not have the ability to sow chaos in the Middle East. You know, they are desperate. They are panicked. They are attacking Turkey, Cyprus, all the Gulf countries. You know, in the last 10 days, Iran has attacked more Arab countries than Israel did since 1948. So they are losing control. And it only shows us that we have to continue, hammer them very strong, make sure that we take care of all the capabilities they have.
The problem is, it means that this war is not slowing down anytime soon. I mean, now Iran is going to be very motivated to protect the new supreme leader and try to make sure he can't get hit. The U.S. and Israel are going to be very motivated to get rid of him. Broadcom making a push for 340, which means this game once again continues of these guys going back and forth with each other. SanDisk as well breaking out 560. This thing was 520 this morning. Seeing a bunch of names kind of catch a bid right here. Majority still red, but a few of them still kind of green. Palantir 155 on the day. VIX is dropping 2980, which is good to see. VG at 1294. Nvidia putting in a high of the day, 178.80. Bloomberg, Wall Street banks are offering UAE staff option to relocate temporarily. Many top Wall Street banks are allowing staff in the United Arab Emirates to temporarily leave the country and work remotely. Goldman, Morgan, Citigroup are among firms that have given employees the option to relocate. Such relocations can be complicated and come with tax implications, and some bankers may also need regulatory approvals to work in foreign jurisdictions. Okay. Looks like they're deciding to get out of a bunch of these different areas. VIX now falling more precipitously, 29.59. This should be your run for the day. and maybe it holds. S&P, let's see if you can break 667. VIX right there at 29. 29.54. Let's get a little bit more coverage as well on oil and gold from this perspective.
To France, to Indonesia, all these countries are feeling the effect of Chinese dumping. That's because they're over-investing, overproducing, and the domestic demand is just not strong enough to absorb that excess production. Now, the problem is that all these countries have been so focused on fighting the tariff battle with the US that this problem has almost got overwhelmed by that. But I think that this is a bigger problem just because now, in fact, the Chinese export surplus has reached gigantic proportions, and never before in history has such a large economy relied on exports to grow as China is doing now. And this is a real problem for the global economy.
Yeah, although Merz and Carney have been going to Beijing, Ruchir, as they are maybe sick of being tariffed by the U.S. and looking for alternate allies. We'll see how it develops over time. Appreciate the help today. Good to see you.
Bloom now catching the bid as well. What he's saying about oil production around China as well, I mean, a lot of it flows down to, hey, how much cheap oil have they been able to get from Venezuela and Iran? And, you know, it's been more aggressive than not. By the way, Trump is still meeting with, what's his name? Xi in April. That meeting was still confirmed this morning. It will be limited to Beijing, not Shanghai, and it'll be from March 31st to April 2nd. Which is pretty incredible. I would imagine China's not going to be the happiest about all of this breaking out, but the fact that they still want to talk to the U.S. is good. That, you know, there's still some level of diplomacy going on, and there might be a plan to deal with what's happening with oil across the entire region. Oklo right there, still a little green. Bloom Energy catching a bid right there, 147. That's up 9% on the day. She's gonna be like, "What the hell are you doing, bro?" Yeah, I would imagine she's gonna be upset. I mean, look, this was strategic to cut off oil supply from China, at least cheap oil supply, but the level of corresponding residual effects makes you wonder if it was really worth it. Figma right there up 5. Bitcoin actually trying to go for 70. But it's not yet, even though it's trying. Duolingo still down 1.5. Amcor, that one got wrecked. CoreWeave, this thing almost below 70. There's a bank out there. I forgot the name of the bank, but they have like a $38 price target. Oh, HSBC. They have basically a $40 target on CoreWeave. And they are so bearish. I was reading the report over the weekend, and they're like, why are you guys investing in this garbage, debt-filled GPU data licenser? Now, there's other bullish perspectives, but basically they were like, this is the dumbest business model we've ever seen, and we don't know why people are buying it. And, you know, if you criticize CoreWeave, then the other ones get some criticism as well, like Iran, which filed for $6 billion of an at-the-money offering. Look, I think that $6 billion could actually be pretty effective if they're getting another hyperscaler deal like they got a few months ago. But if not, that $6 billion is just going to be dumped on retail, and it might give the stock a little bit of pressure. Do you think Amcor is a buy here? I mean, it's pretty much given up the entire move this year. So, yeah, I think it's relatively cheap. But again, packaging growth just has to continue. And, you know, based on NVIDIA's earnings, based on TSM's earnings, it's hard to imagine that that wouldn't happen. Same thing with Broadcom. NVIDIA right there going for 180, at least trying. SPY, we got 667. Broadcom above 350 or 340. Robinhood, not testing 80 yet, but she's trying. VG still up 2. SanDisk, that's getting a move. Did Iran buy a bunch of chips? Yes, they said they are buying another, I think it's 50,000 GB300s with the money. So they will be buying more. And then AMD, 193 right there. Redwire is catching a nice bid. The rest of the space names not really catching a bid. Lunar still down 4%. Yeah, we absolutely have to break 667. I mean, realistically now, we got to reclaim 670. 670 was the level that we were not supposed to lose, and we lost it last night. If we could reclaim it today, that, I mean, I don't know if that's bullish, but it definitely wouldn't feel bearish. But now it's going to be a fight to try to, get above those levels. I thought I heard, did Iran buy more chips? I don't think Iran is going to be focused on chips right now. They've got some other stuff to deal with. Oh my gosh. Let's see what other headlines we have. European gas prices spike as Middle East war dims supply outlook. Conflict now is in its 10th day. WTI, are we still above 100? We are at 101. That's still green. I see Chad in the chat, so let me actually show you guys something that Chad posted today, which kind of blew my mind when I saw it. So Palantir has this new thing called Pilot, and essentially it's their version of letting people build without being a coder. It's their newest application builder called Pilot. So think of vibe coding on steroids. And Chad was like, what do you have an idea for? And I was like, can you build me something about movies? And this is really cool. So he built me something, as you can see right there, is currently right now, that is a quote lookup tool, helping Amit actually understand movie quotes since 2026. And yeah, I can now put in a quote from a movie and it'll actually find me the movie. Oh, this is hilarious how Amit probably says it. That is ridiculous. And then we have a word of the day thing as well. So next time you guys clown me about not knowing a movie, I'm actually going to use this. Type in a quote and see if I can find the movie. But I mean, it goes to show, and what it and the cool thing about this is it's building an ontology underneath the actual quote unquote vibe coded platform, which I think is actually really cool because one of the things that makes these applications useful is if they actually have the context of data going into the platform. S&P 667. And so I do think this proliferation of people being able to code on their own and build things, it's happening. And it's really freaking cool because it's leading the democratization. I know we overuse that word, but when it comes to people being able to build shit, like this is what Vlad said on our podcast over the weekend. Vlad said, he thinks the businesses are going to explode because more and more people are going to build. All within AIP, human in the loop, without having to control security or help. You're the final approver to merge into your main. And the branch is called CRN. Okay. All right, Chad. We get it. We get it. As you can see right here, Akshay said, Pilot handles the development lifecycle from description to deployable application, including object types, writing action types, designing a UI, writing ontology SDK hooks, allowing you to focus on what you want to build rather than actually building it. Yeah, I think this is not slowing down. And, even like Chad said, what's your idea? I literally thought of it in 2 seconds. Like, I would love to have something where I could just find movie quotes by typing in the quote and then figuring out what the movie is. And then it's built with an entire ontology. Like, the fun thing about this as well is that if someone has an idea and they want to build something, they're just going to go build it. And they're not going to have to be so scared about, like, if I have the ability to, build it. Our boy Matt Money, I don't know if he's in the chat, but he built something over the past couple of weeks. It's called probably.ai, as you can see right here. And it basically is just, from my understanding, you have any stock, it tells you everything about it. It tells you macro updates, commodity prices, gold stuff. I think he built this with Claude, if I'm not wrong. It's called probably.xyz. I'll put it in the chat, but I mean, dude, to build something like this, even from a UI perspective, would have taken freaking months, years ago, and you would need to pay a developer. I think that's the difference. Yeah, build me a CRM, make no mistakes. Exactly. S&P, can we see 668? Can we see it? Can we see it? Iran security chief in response to France Macron threat of Hormuz remarks, it is unlikely any security will be achieved amid the war. Macron did say over the weekend we need to open up the strait aggressively. 667.64 on the S&P. Oh, we do have Matt in the chat. All right, there you go. Yeah, you guys can check it out. I was playing with it over the weekend. Probably.xyz. And it's just cool, dude, to see people build shit and become, and and then if you have distribution, you have marketing, you have something you think people are willing to pay a couple bucks a month for, like, you're in business. And I also do think when Vlad said there's going to be more legal demand over the coming years because you're going to have more entrepreneurs, I think he's right about that. Like, as much as legal demand could be, or legal advice could be automated, you're going to need more lawyers if you have more incorporated companies. Now, doesn't mean every business is going to work out, but it does mean that there's more of a proliferation of the opportunity for businesses. S&P breaks 668. Okay, that's your high of day. Robinhood just went green. Palantir is close to going green. VG still green. Nvidia's pushing. You're seeing some of these green candles pop up. Don't know how real they are, but they're trying. Bitcoin as well, 69.2. Could SaaS still go to the moon? Well, look, I think the best SaaS companies will still be okay, but I do think there should be a concern for software companies, because if Salesforce is getting disrupted, then these mid-tier, small, couple $10 million companies in software, there's no way they're not thinking that they could also be disrupted as well. Now, again, if you're like a legit software company with a real moat, like an AppLovin or a Shopify or a CrowdStrike, in my opinion, I think you're going to be okay. But it definitely does feel like SaaS companies that were charging per seat and weren't really offering anything of value, that's going to be done. But that also means there's a lot of opportunity for people to build different products. Reddit right there is still down 4%. I don't think Zeta's included in that just because I think their moat is the first-party data that they have. And that's why, they're able to deliver the advertising results for their clients. Zeta right there trying to go green on the day, 10 cents away. I don't even think Salesforce is dead, by the way. I'm using them as an example of, at least anecdotally, we've talked about on the channel, there have been people that have started to build their own CRMs. And so that money they would be paying Salesforce has gone away. And the question just becomes, is that applicable to a lot of these other software names that are out there? Chad says it is the same for people as companies. It's people who use it to learn and be more effective versus trying to sell more useless bullshit. Yeah. Yeah, and the reason the private credit companies are struggling so much is because a lot of what they invested in back in 2020, ended up being software. And it's like these small $100, $200 million software companies that just, there's no reason for them to have gotten those valuations back then. And for some reason, private credit and private equity loaded up on software 4 years ago. I guess software was just like the easiest business model for people to come up with, and it was always getting like a 40 times sales multiple. It was always getting, big multiple expansion. And so that's what people got kind of convinced on. But it's not necessarily the best business model. We have the IRGC advisor who just put something out. Let me pull this up real quick. Let's see what they are saying. VRT, again, that is up because of the S&P 500. Okay, let's pull up what he's saying right here.
اشتباه لفظی توی مصاحبه هاشون
Okay, never mind. He's speaking in a language that I can't understand. However, the caption says, quote, as someone who is informed, I say this, we are prepared for 10 years of war with the United States, at least 10 years. Okay. Well, I hope we're not in war for 10 years, but it looks like the Iranians are saying they will try to be ready for it. VIX just went red. VIX just went red. 2870. S&P's got to be pushing now. Still below 668. But the VIX indeed did go red. Yeah, software is eating the world. That was a big headline, in Andreessen, one of the biggest venture firms. They kind of led their entire 2010s momentum through that concept of software is eating the world. And I guess that's what led to a lot of these valuations in private credit and private equity. This was the story on the 26 billion credit withdrawals, which caused BlackRock to go down 10%.
It's not clear sort of where to begin. We actually had to erase some of the stories that we were going to mention because it would have just taken too much time to update everybody on everything happening just in the last 24 hours with concerns around private credit. What's the main concern to you?
Well, private credit is experiencing its Roach Motel moment in terms of retail getting spooked. Retail is really worried. Retail's trying to take out more money than you're allowed to take out. But I would say also look at the prospectus, the BlackRock prospectus for the fund that is being redeemed right now. It says on page 1, 5%, and it's up to them whether they even do that. So you should read the paperwork. The problem with credit and a lot of markets over the last 5 years or so of easy money is people just haven't been doing that work.
So do people ever do that work?
Well,
it's on page 1.
But yeah, but shame on you. I mean, this is one of the things that we always talk about when we talk about private credit. And I've had terminal users like, do people understand what private credit, how this market works? That's an understanding. It's not liquid, right?
It's not liquid. These are long-term investments in direct loans, which, you sign a contract, you agree to lend the company money for, let's say, 5 years, and you get it back after 5 years, plus a premium. Plus, I'll tell you, investment grade bonds right now, 5%. I'm going to offer you something else for 3 times that.
Right.
What do you have to do for me to get that extra return? Repay.
And that's why you're seeing a lot more calls for withdrawals and redemptions. And, that's why BlackRock stock has been getting hit along with Blackstone is like, they don't want to give those redemptions. BlackRock down another 3% today after being down 7% on Friday. A couple quotes from the G7 officials. There was a broad consensus at the G7 finance ministers' call on Monday not to release oil reserves just yet. G7 energy ministers to hold a teleconference on Tuesday. Final decision on whether to release oil reserves more likely to be taken by G7 leaders. One official says it's about timing and more analysis is needed. Trump also just giving a quote to the New York Times, or not the New York Times, the New York Post, saying, quote, he's nowhere near ordering Iranian ground missions, and he is, quote unquote, not happy with Tehran's new leader. I mean, obviously, he would not be happy with the supreme leader's son being the new supreme leader. But it is good to say that he's not thinking of ground troops, which is, over the weekend, a lot of people thought that he would be thinking of that. Trump has been giving these like short 2-3 minute interviews with a bunch of these different, like he goes to CNN, he goes to the New York Times, he goes to the New York Post, goes to the Washington Post. He's like not doing a press conference, but he's calling up all these reporters and he's giving them a couple minutes and then giving them these quotes, which is why you're seeing all these quotes come in random waves from Trump around the war. And, we're trying to piece together the story every single day. Bitcoin still at 69.1. Okay, another thing on private credit. Let's play this clip from over the weekend where you had one guest on the Compound and Friends make the argument that private credit is this generation's subprime mortgage loans.
Causal.
Okay.
Now, in the case of subprime in 06, 07, it was both. It was both a sign that there was up underwriting taking place, and it was causal because it was pulling out the Jenga pieces at the bottom of the tower. I'm not the one making that statement. I am the one hearing that statement, and I would love to hear from Garrett.
Private credit is pricing a massive default cycle. It is. So, Garrett, what do you think about this?
Well, but again, it doesn't have to be a subprime crisis of the proportion of everybody losing their house. I'm not saying it to that degree. I'm saying that the source of the crisis is in private credit, like it was in subprime, and like it was in unprofitable tech stocks, and like it was savings and loan, paying 20%, having to pay 20% to make 8%. This is where a lot of people who are banking experts that I listen to on a regular basis have consistently said, look, this is going to be the source of the next crisis. And if we look at what this really is, this is the shadow banking system, right? It's private credit, it's private equity, it's hedge funds. It's all largely unregulated. Being
financed by the traditional banking system.
But what was there? These banks are originating loans and then just can't wait to get them off their balance sheet. That's what they're doing. Like since Dodd-Frank, banks don't bank anymore.
But the banks are making the loans.
And then they're dumping them,
right?
And then they're handing them off, and that's the real issue at the end of the day. Like, where did the origination of the housing crisis start? It didn't start at Goldman. It started with MBS in the shadow banking system.
So the argument that Garrett's making right there is that it's not going to be as bad as 2008, but in terms of everyone loses their house and stuff, right? Maybe it could get that bad, but he's not claiming that. He's making the broader argument that there has been a lot of shadow banking in terms of the underwriting procedure for these loans, just like we had during 2008. But now it's happening in private credit. And quite frankly, this goes back to 2023. I mean, we've been covering this for a while. It's just not been more important than like NVIDIA earnings, which is why the market has kind of overlooked a lot of these different issues. But going back to freaking 5 months ago, what was the biggest quote from Jamie Dimon? Cockroaches in private credit. And if Dimon's right about that there's a lot of underwriting that's been done, particularly around the credit for these software companies and then the equity for private equity for these what do you call it, private software names that are now essentially being marked to market at a massive discount. Some of these are 80% down from the original prices, then that's going to cause some type of a blow up. Now, thankfully, it's not people's mortgages because that's a lot more intense, but it's still going to have ripple effects throughout the entire economy. And that's, I think that's part of the reason why SoFi has been getting hit as well, even if it's not justified. S&P right there, high of the day at 668 as that continues to go green. Wow, Anthropic sues the U.S. government after it's been designated a national security risk. Is that official? Did Anthropic actually... Anthropic, it looks like that's official. I mean, Dario said they would on Friday. Yeah, Anthropic sues U.S. government after being designated a supply chain risk for refusing to remove AI safety guidelines. Anthropic seeks court order to reverse blacklist, restore federal contracts. Anthropic says First Amendment protects right to set ethical limits on our own technology without retaliation. The Anthropic thing is going to be very interesting. They are allowed to sue the U.S. government because that is what happens in a democracy. If you think the government has unfairly procured software, you are allowed to fight back, and a court is willing to listen to you. The Olin pod over the weekend I thought was really interesting in terms of getting some more updates on what exactly the issue was with Anthropic and, kind of what they were asking for. This is a clip from it, but, essentially they were saying that Anthropic was just trying to impose their own morality on the Pentagon, which made it impossible to work with them.
You could do a scenario, but you can't, let's suppose you're writing a plan saying, if this happens, here's what we would do. And it might involve a kinetic strike, which causes harm to a human. So, well, what do you think these folks do? This is the Department of War. This is what we do. And so I said, okay, well, I've got to, number one, have direct relationships with these companies, not just through Palantir, because I want to use it more broadly. And then number two, I need to have the terms of service be rational relative to our mission set. So we started these negotiations, and took 3 months, and I had to sort of give them scenarios about like this Chinese hypersonic missile example. They're like, okay, we'll give you an exception for that. Well, how about this drone swarm? We'll give you an exception for that. And I was like, the exceptions doesn't work. I can't predict for the next 20 years what all the things we might use AI for. And so all lawful use seems like a good thing. If Congress wants to act, great. We have our own internal policies, like we'll follow them. We're not knuckle draggers here. We don't want to hurt people unnecessarily. So, it's our province to decide how we fight and win wars, so long as they're lawful. And I think at some point it turned into a PR game for them, because they were not going to win the intellectual battle of, well, we're going to stop you. We're going to use our judgment because we think Congress is behind and impose it on the U.S. military. And it became this, like, let's find the issues that are most inflammatory: robot weapons and mass surveillance. And we're the Department of War. We're not the FBI. We're not Homeland Security. We're not
You're
ICE.
not allowed to legally spy on Americans.
Yeah, you're not. So so you're like, well, and then what it came down to on that issue, just as an anecdote, is they didn't want us to bulk collect public information on people using their AI system. And they wrote it in a way that I was like, so you're telling me before we got to bulk collect, if someone types in, Shamat's LinkedIn, I'm using public available information that I would be violating your terms of service. Like, yeah, well, okay, let's rewrite it. So there's months of this stuff, which was sort of interminable. And then the trigger point was after the Maduro raid. One of their execs called Palantir, who we buy themselves to, and asked them, was our software used in that raid? Which is
so we listened to that clip on Friday, and that's what led to Palantir basically telling the DOW what's happening with Anthropic. But essentially, the DOW's argument is, hey, these guys wanted way too much out of us, and there was no way we could meaningfully work with them. Anthropic's perspective is pretty different on this, but that is the beef going back and forth. It will be very interesting to see it go into court and see who ends up winning this case or not. And, if Anthropic actually has an argument that they can meaningfully defend. But it looks like OpenAI is now going to be the de facto model over the coming months as Anthropic is phased out. And that's a lot of business that Sam Altman is winning. Apple right there, flat on the day. NVIDIA still below 179. Meta down 1.35. AMD still red. I mean, S&P is holding the high of day pretty nicely, just under 668, which is good to see. The VIX has officially gone red. It was at 31, now it's at 2850. I mean, it's really not as ugly as it was last night. Last night was much, much worse. But oil, still, are we still over 100? Or WTI, 100.60. Again, at 1 a.m., we were at like 120. So thankfully, it's taking a little bit of a breather. Yep, AMD, sorry, AMD is green. Say one thing wrong about AMD. The AMD cult will go after. Yes, AMD is green by $1. That is correct. AMD is green. I am sorry. I will write a handwritten letter to Lisa Su apologizing for saying her stock was red when it was green. All right. That's what we got, folks. I'll be back on the close, and we'll keep going from there. I mean, once again, every single day, we are stuck within the chop, and this chop is not really stopping anytime soon. I think in the midst of everything going on, it obviously can get very political in terms of how people feel about the war. I just think it's important to understand multiple perspectives on this, and I've been trying to study as many perspectives as I can over the weekend. From the Iranian side, from Trump's side, from the left, from the right. Because I think that's where you get a bit more of a holistic view. And my takeaway from the weekend is that there are some people that genuinely think Iran getting a nuclear weapon would be the worst thing for humanity. It would be akin to many countries in World War II that we didn't want to get a nuclear weapon, getting a nuclear weapon. But you have a lot of other people saying that we don't think that threat is real, and we think the administration is doing this for nefarious reasons. And if it's affecting affordability, then it's not something we care that much about. And I think, once again, those two perspectives will be competing for the midterms. And inevitably, one of them is going to create a referendum on how this plays out. But the stock market going down is the least of our problems if this war continues to be as long as it is. I think the level of political disagreement internally inside the country that it could create is even scarier if people really start going back and forth about what the point of this even was. Covered calls, I think they continue to work. They've been printing over the past couple of weeks. I think if we stay in the chop, they will continue to print. And if you have a heavy position on a name and you want to generate some yield off it, if you don't want to sell it and we go down, you might as well collect some premium while we go down, right? If we're going to crash, you might as well at least collect some premium on the downside. If you're worried that we spike back up, I mean, maybe it's just like, take a look at the macro environment. Do you think NVIDIA just pops up to 200 anytime soon? It's like, probably not. If it does, I'm happy. If it doesn't, then okay. I don't think Robinhood's going to 120 anytime soon. I don't think AMD is going back to 260 anytime soon. If this stuff is just going to stay more subdued, then maybe those calls could be a bit effective. Would you buy stock just to sell covered calls right now? Yes, but again, my sort of 3-part formula last week was it's got to be a name I love to own. It's got to be a name that has the volatility to generate relatively decent premiums. And then most importantly, it has to be a name that's trading at a decent multiple. Decent is subjective, but if you look at Meta, Microsoft, NVIDIA, Amazon, those are very reasonable multiples. If you're buying a name that's trading at like 800 times price to sales just to run covered calls on, if things go south, that name is going to get decimated. And so I wouldn't really buy volatile names just for the premium if their multiples are too strong. But plenty of names are relatively cheap that still offer decent premiums as well. And I wouldn't really sell puts here because if things go south, then you're going to have to be assigned heavily unless you sell those puts really far out and you're okay with like getting assigned a SoFi at $12 or something. Even though I don't think SoFi is going to $12, but you get the point. So I think that might be one strategy to navigate. Where is Pinterest? They had $1 billion Pinterest, 1940. That's down 2.4. Hims is holding on. Again, Pinterest got that $1 billion stake last week. Hims 43%, 2250. As that continues to hold on. Iran, that's up 1%. Amcor, that's down. Robinhood's up a little bit. NVIDIA's up. S&P, she's close to 669. If she breaks 670 and we recapture that moving average, that would be very, very important. So let's see. Maybe throughout the day we have a shot for that. All right, word of the day. What do we got? Word of the day. I think I've heard this word before. Inscrutable. Inscrutable. Impossible to understand or interpret, mysterious and difficult to read. The CEO's reaction during the call was inscrutable. No one could tell if the results were better or worse than expected. Inscrutable. There's no way I'm saying this this word wrong. So we should be okay here.
Inscrutable.
Okay. There you go. Impossible to understand or interpret, mysterious and difficult to read. All right, so we don't have any earnings today. Tomorrow we have Oracle. So we have no real earnings today. Tomorrow we have Neo, Kohl's, Oracle, and Aero Environment. So we do have some defense, EV, and then data center plays. And then throughout the week is kind of light on earnings. So yeah, we'll see what numbers we get. We'll keep a track of oil. Hopefully this thing can start to reduce a bit by the end of the day. But as of now, we are looking at $100 oil, and hopefully that can come down. So, did we hit 669? Well, there you go. All right. This is our midday pump. Hopefully it sticks. 669 on the S&P. Maybe we can get to that 670 level. All right. Thank you, everybody. Appreciate it. I'll be back on the close. We'll keep going from there. And hopefully we can hold on to some of this momentum. Bye, everybody. Have a good one.